Hello everyone, welcome to another live stream. I hope you had a good weekend, hope you had some fun, hope you had some rest. Summer months, a bit quiet in the markets, that is to be expected, so it's not a surprise. I want to remind you, we're running a new stream schedule, so this is the second week of the new stream schedule. You can find the schedule on the A1 website, okay? So it's here. And essentially the aim is to prolong the stream as much as we can. So we're doing double segments, joint segments, and we're trying to spread it out as much as we can. So that's why we're starting early and we're finishing at the same time as usual. To get things started, I was looking at my stocks here because I trade individual stocks as a strategy. So I have multiple strategies in the markets, and essentially a new one that I've implemented in the last 1 to 2 months has been picking stocks to the long side. So I had Best Buy, closed it because I thought we were going to close below the 10 EMA. That's an exit rule, but we didn't. So now kind of scratching my head that I should still be in this trade, but it's part of the game. You know, I didn't follow the rules too closely. Should have waited for the last 5 minutes of the close. I didn't do it. I was too lazy. I waited for the last half hour, so closed it prematurely. Anyway, that's still in forward testing. So if that goes well, if I have good results, I will introduce it to the A1 Trading Discord through signals or through trade ideas. So if you want to join the A1 Discord, I'll post the link right now. Let me just grab it from my files. Let's go to stream links. So it's free to join and you can become a paid member if you decide to do so a bit later. In the comments, you'll find the link, and in the description of the live stream, you will find the link as well. Okay. So hello, everyone. Excited about it. Hello, Nick. Greetings from the UK. So it's not Nick, it's Marco. Because I'm in Europe, I am starting the stream. So we're trying to cover both the US session and let me just move the camera a bit. It's a bit better. Okay. We're trying to cover the US session and the EU session. Good morning. How do you choose stocks? So just briefly, how I choose stocks is the first prerequisite. You need to have the SPY in an uptrend. So the SPY needs to be above the 50, the 20, and the 10 EMA. If it's not, you don't take any trades. So this is a no-go environment. This is a perfect environment. This is horrible. This is horrible as well. This flat price action. This is amazing. So 70% of the time you're taking trades. 30% of the time the S&P is flat or it is in a downtrend. Okay, and this is a purely long-only strategy. So you're buying breakouts. Let me show you my focused watch list here. So essentially, you're looking at stocks that have a big leg up, at least 30%, and then a consolidation. You're trying to buy a breakout. So these are some of the best ones that I found right now. See how they are trying to break out? They're consolidating after a big leg up. That's exactly what you wanna see. This one is not good because it just crashed lower to the 50. Okay, so it needs to climb back, and it needs to do this. It's basically the strategy that Kulamagi uses and that he discussed in the new Market Wizards book. Okay, very simple stuff. And a lot of traders are trading it, but they usually make all of their profits during this phase where everyone can make money. It's not hard to make money when the S&P is doing this. It's tough to keep it when it's flat. It's tough to keep it when it's going down. So the difference between a profitable trader and a trader that just made money one time is the profitable trader makes money here where everyone makes money, but he keeps his profits during this phase because he knows when to stay in and when to stay out. That's the main difference. That's all that you need to know about most trading strategies. So during the good times, everyone makes money. The thing that distinguishes the good from the bad is the good traders, they keep their profits. Okay, the good traders, they tend to keep their profits. Rev, hello. Good evening from Malaysia. Welcome. So, to get things started, this is the first stream of the week. First session, Monday, early in the morning for guys in the US, kind of noon for people in London. What do I want to start this stream with? I want to start it with the calendar. So we have a lot of stuff. We actually do have a lot of stuff this week, which means we could get volatility, which means we could get some trades in. Okay, so the best time to be trading is when the calendar is packed. The worst time to be trading is when the calendar is blank. This week is pretty good. You have the most important event of the month, which is the Fed funds rate. So funds rate statement press conference. I'm thinking they keep the rate the same. So I don't think they actually hike rates, but they could sound a bit more hawkish than the market expects. They could definitely sound a bit more hawkish. My reasoning is the Strait of Hormuz is closed. So if you look at the Hormuz traffic, portwatch.imf, trade disruptions in the Strait of Hormuz, check this graph out. So basically, if we go year to date, we had around 70 to 100 crossings per day before the war. Then we went to zero, almost zero. Then the Strait opened, we went to around 30 per day, okay? Around 30 per day. And then the Strait is closed again. If you didn't catch that, I think July 8th, 9th, 10th, the Strait was closed or got closed again. So guess what happened? Crossings went to 0 to 3. Okay, 0 to 3. Or maybe 5, but very, very low. Now, what does that do? It puts the pressure on the SPY. Okay? Or not the SPY, on oil. Okay? Puts the pressure on oil. So oil aggressively went up. And this is the thing that caused high inflation the last time. So if I open up the Edge Finder, and if I go to economic data, inflation, CPI, USD, you can see rising inflation. Okay. Yes, the latest print was cooler than expected, but that was when the Strait was open. Strait is closed again. So I wouldn't be surprised if inflation starts running back above 4.2%, maybe even around 5%. That means the Fed is going to have to turn hawkish, and they may not hike in July. They may hike in September. I think in September, there's actually a pretty high chance that they do a rate hike. So because of that, I have bought USD CAD. I'm in this position. Currently, it's a little bit in profit, but it's not looking so great. My game plan is this, or my thinking is this: the dollar is going to appreciate at least to these highs, okay? And I think the Fed is going to have to hike rates. I think that is going to happen. So that's how I'm positioned. Back to the calendar. So we have the Fed rate. We have the Bank of England. Okay, if you're trading the GBP, that is going to be pretty important. We have the GDP for the US. We have the core PC price index. So that is inflation. Okay, I think it's lagging a bit, but it is inflation nonetheless. So we should get some more information of the inflation in the States. Am I correct in saying that inflation is going up overall, or am I wrong? Personally, because of oil, because oil is raging and oil is highly elevated, I believe I am correct. That's how I'm betting. Okay, that's my bet. Then we get the Bank of Japan policy rate. So policy rate statement, outlook, press conference. Very important stuff. Very important stuff. Now, why do I say that? Because the yen is in the dumps. The yen is struggling a lot. So the yen is just going down, down, and down. The government in Japan, they definitely want to push the yen up. They told the pension funds that the pension funds should basically sell foreign assets and buy domestic The effect being that the yen gains value. The BOJ could do a rate hike, which is not expected. So as you can see, the forecast is for the rate to stay the same, but they could do a surprise rate hike, surprise the markets, and push the yen up. It could happen. So we could consider buying the yen going into that event. So the event is happening on Friday. I think it's usually 2 in the morning my time, so 2 in the morning London time, something like that. That's usually been the case, during the Asia session. But from my reading and from my research, it is actually highly likely that the Bank of Japan, or it's not highly likely, but it could happen. It's not impossible for the Bank of Japan to do a surprise rate hike. Could happen. Also, if you are covering Japan, or if you are reading about Japan, you would notice that the government from Takaishi, okay, the Prime Minister of Japan, her government is losing votes, is losing popularity, not votes. So losing popularity, and one of the main reasons is the inflation that is rising in Japan. So I think if you go to the JPY, yeah, it's kind of rising. I mean, it's below the target of 2%, but from my research, the people in Japan are not satisfied with the current government. So the current government may want to push the yen up, okay? Kind of hike interest rates, tame inflation even more, push the yen up, because the people of Japan have been losing purchasing power. Look at this chart. So the yen has pretty much lost value against every other currency. So if you live in Japan and if you have a lot of yen, your purchasing power for foreign assets has been dramatically going down and down. Let's see, from the beginning of the year, 2026. Okay, 4%, which may not sound like much, but it could be much, especially if you're a company in Japan, especially if you're a company that has to buy a lot of foreign stuff, okay? So it's a problem, But let me know in the comments, what do you think? So does the Bank of Japan do a surprise rate hike or not? I'm interested to hear what you think. Okay. Let's see some more comments. Why is the DXY, US oil, US 10-year, 2-year going down as geopolitics tension is increasing? That is a good question. That is a solid question. And yes, S&P is up. Oil is down, especially US oil, down 8%. Yields down, 2-year, 10-year is down. So we're getting a risk on market. DXY is down on the day. Okay, DXY is down on the day. Why is this happening? That is your question. Well, over the weekend, we got some news, and usually the market does react to it at least a little bit. So we got some news from Trump, we got some news from Iran that the attacks will pause. So the attacks will pause, but my best advice would be that doesn't matter much. Attacks may have paused, but the strait is still closed. The strait is still mined. The strait is still heavily patrolled by the US and Iran. The US still has a blockade on the strait. So because of that, and Iran has a blockade in the other direction. So because of that, I think long term, my theory is still solid. I still believe oil goes up. I still believe inflation goes up, and the Fed turns hawkish and the dollar goes up as well. Okay? We kind of had this bull flag. Okay, so this is the flag. This is the pole. See how it looks like a flag? It's called a bull flag. We broke out of it, retested it, and we could be ready to go up. So that's personally how I'm seeing the situation. I'm seeing as I'm seeing the situation as short-term risk on. So short-term, kind of good for stocks and bad for the US dollar, but long-term, I'm not seeing that things have been resolved and the strait is still closed. So the most important part of my thesis, the most important part of my theory the most important reason why I'm long USD CAD is because the Strait is closed. If Strait opens, and if it stays open, we should get new data today or tomorrow. If the Strait is open and if it goes back to 50 or 60 ships per day, then I'll probably need to close my trade for sure. But I'm looking at the situation in a logical way, and I'm not seeing a possibility of that happening anytime soon. Okay, just I don't see it. That's how I'm betting. This time, I will not fall into the trap. Midterms around the corner, and Trump administration, I think they will compromise to come up with a win-win deal. Well, look, Iran is winning out of this situation. So as long as the Strait is closed, it's putting a lot of pressure on the United States, and I don't think Iran is interested in resolving it anytime soon, because the longer the situation stays like this, the more that oil goes up, the worse the conditions get that the US will need to accept. So Iran, at this moment, I don't think is interested much to make a deal, because they can get even better terms if they wait for this to go up even more. Okay? They can get even better terms as far as the deal goes. I think the current range of oil is still, if you look at this range, it's still in the bottom. So I would not be surprised if we hit 100. I think that's a realistic target, 100 on oil. And that puts even more pressure on the US. So midterms, I thought that they did matter a lot, but I don't know, looks like they don't matter much to Trump, because he escalated things again. Strait, remember, the Strait was open at one point. He could have just kept it open, right? He could have just kept it open, waited for the midterms to pass, and then start some shit. But looks like he just wanted to start some shit right now. So that's how things are going. Morning. Thanks for the stream. No worries. Hello, Sluggy. Welcome. Good morning from Florida. Hello from Croatia. So Florida seems very nice. I always wanted to visit Florida. Have good weather. Ships, boats, the sea. Looks pretty cool. Other central banks hiked too this year. I believe the carry trade is still alive. I think it is. Yes, I think it is. How could the Nikkei index be affected by the upcoming economic events? Well, I personally believe that most of the events will come out bearish for the Nikkei. So if the Bank of Japan hikes interest rates, if they do a surprise rate hike, that is bad for stocks. That is bad for the Nikkei. If the pension funds in Japan, so if pension funds sell foreign assets and buy domestic, meaning sell US bonds, let's say, and buy Japanese bonds, I think the effect should actually be bearish for the Nikkei. I think it could be bearish for the Nikkei, because the yen will gain strength, and the Nikkei is paired with the yen. So as the yen gains value, the Nikkei should lose value. Okay? Let me see, I lost the comment. Euro NZD bullish, GPIF to buy assets is something to keep an eye. Yeah, I'm looking at Swiss yen. So I want to sell Swiss yen, betting on the yen strength. The reason I'm selling Swiss yen and not something else, because Swiss yen is pretty cheap when it comes to swaps. So depending on your broker, you can even get positive swaps if you hold a sell position. So yeah, I want to sell Swiss yen once we cross the 200 level. That is the general game plan. Okay. So sell Swiss yen, hold the position for, I don't know, 1, 2, 3 months, because it's not that expensive to hold, as I mentioned. And so, sorry about this. If I do take a position, it will, of course, be a signal or a trade idea in the A1 Discord. So if you want to join the Discord, you can even join for free. I'll post the link one more time. So let me copy this. Paste. So the link is in the comments and in the description of the stream. If you do want to become a paid member, there's a huge sale running right now. You can become a paid member of the Discord and get all of my trades, all of my thinking, all of my analysis. It's not just me, it's Nick, Chris Pulver, Iwind, Alan, and a bunch of other profitable traders. So make sure to, if you want to become a paid member, use the code Marco. Because we're running a massive summer sale at the moment. This code also works for the Edge Finder. So if you want to get the Edge Finder, currently it is 45% off. Okay, we're running a summer sale. It is the biggest sale of the year. All of the information, all of the links are in the description of the stream. Do take advantage of the massive sale because it's going to end in just a couple of days, I believe. So by the end of this month, it is going to be over. So do take advantage. Iran is now fighting with Ukraine. I would ignore that. I saw the headline. I saw the breaking news. I would ignore it. Hello from Poland. Welcome. Gold and Bitcoin. Everyone is expert in gold. So I do know you want to see gold. I know a lot of new viewers came into the markets in 2025 when you had this massive run up. Okay. Personally, my best advice would be to focus on something else. So if you backtest the markets, if you look at what happened in the last 10, 20, 30, 50 years on gold, usually when you get a huge move up, usually when gold makes 100% in 1 year or more. So let me see. Okay, so it was not 100%, but this move was massive. So usually when you get such a move, then you get a crash. We got the crash, but it's not likely that we will get another huge move this year. Okay, this is not likely to happen. Now the reasoning is, so who bought this price action? Who got in at this explosion? A lot of retail. And a lot of retail got right at the top. They bought right at the top and they got burned during the crash. So you need the retail to participate, but the retail is not super happy to buy at these levels because they got burned in the crash. You're missing fuel. You're missing the momentum. Same thing with Bitcoin. So Bitcoin, it's missing the retail, it's missing fuel, it's missing the momentum. Same thing, for example, SpaceX. A lot of retail got burned buying these highs. And then it went down 50%. So the general theory in trading is when you have a bubble, when you have the massive explosion up, when you have the massive explosion down, when you have the massive correction, usually it takes a few months, actually a few years for the sentiment to reset, for the retail to forget how much money they lost, and for them to be interested again. Just look at the price action in gold. So from 2020 to 2024, nothing, flat. From 2011 to 2019, that's 8 years, nothing. A bearish market. It was very tough to make money here, okay? So, personally, yeah, this explosion is massive. This explosion is massive. Personally, I think we just get this. Okay, in the next few months, maybe even the next few years, we just get flat corrective price action. That's how I'm seeing it. And just excuse me for a second because I need to grab a glass of water. My throat is not cooperating. Okay, we're back. So, India mentioned, nice. Gap up from gold overnight. I mean, you guys are focusing too much on this short-term price action. Like, this is the daily chart. Look at this. This is a super tight range. I know if you drop it down to the 1 hour chart, even the 1 hour chart, it's chop. So if you want to take my advice, I know most of you won't, but if you want to take my advice, and I've been in the markets for a few years now, and I follow a lot of veteran traders that have 15 to 20 years of experience, this is not the market you want to be trading inside of. Okay. You may want to execute the long position that you want to hold for a few weeks to a few months, but short-term trading, this is not the play at the moment. So even stocks look flat. They look bad. They look range bound. The only edge that I'm personally seeing at the moment is in the US dollar. Buying the US dollar and buying the Japanese yen, or essentially selling Swiss yen. So that's how I'm seeing the markets at the moment. And we need a new catalyst. We need a new market mover. This week calendar is packed, so we could get something. Also, I want to mention the CAD GDP is coming out on Friday at 14:30. So that's going to be important because I am short on the CAD. So I'm bullish on the US dollar and I'm short on the Canadian dollar. So this is going to be an important number for me. Yes, this position is mostly placed because I'm bullish on the dollar, but I still do need to follow what the CAD is doing. No cooperative. Hey Marco, can you check CAD yen? Will you give any trades? I'll take it. Sounds reasonable. Hey Marco, can you check CAD yen? Do live trade? Change chart background, candle color because chart's not clear. Only clear when you zoom in. Okay, CAD yen. PY. CAD yen on the daily. It seems a bit flat. Seems a bit flat to me. Let me run it through the top setups. See what we get. CAD JPY. Very bullish print. Personally, I would not be a buyer here because I'm betting on a stronger yen. I'm betting that the yen appreciates in the next 1 to 2 months because of all of the things that I mentioned before. So because of the GPIF, so the pension funds, because the Bank of Japan may do a surprise rate hike, because the government in Japan is losing popularity, because the yen is losing value. So I think they want to turn the yen around because you can get an intervention. So they have the Japanese government has multiple tools that they can apply to push the yen to the upside. And your CAD yen is going to get crushed. So this is probably going to happen. That's why I would not trade CAD yen. Selling CAD yen and holding that position could be expensive because of the negative swaps. So Swiss yen is my top pick. Okay, Swiss yen is my top pick. Anything that has to do with the yen, I am interested in buying the yen. I wouldn't sell the yen. If you want to do something with a CAD, personally, I think the CAD as a currency is weak long term. Short term, let me check. So short term, it's okay in the short term, but long term, the Canadian dollar to me seems weak. That's why I am selling it. GPUSD, Swiss yen. What about Euro Aussie? Okay, I have 1 more minute, so let's finish up with. Let's do oil since it is important. So we're selling off a bit today because we had some positive risk on news during the weekend. I think this is just a short-term sell-off. I think we could hit 100 on Brent. Brent is the best indicator for the Middle East conflict, not US oil, but Brent oil. I think we could pull back a bit more, yes, but I think we reach 100. Okay, I think the Strait of Hormuz remains closed. So that's how I'm positioned. That is it from me. Thank you very much for watching. You can catch me again in, I think, 2 hours. I'm doing my second segment Also, don't go anywhere because you have James coming on in like 30 seconds. And yeah, my best advice would be, I know you love gold, but gold is doing nothing at the moment. You're going to get chopped up. You're going to lose money. Do yourself a favor and look at other things. So let me go to the media assets and let me click the mid-roll video. Thank you. See you in the next segment.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. Happy Monday. I hope you all enjoyed your weekends. Let me just sort the camera, make it a bit more centered. There we go. Yeah, good afternoon, good morning, good evening, wherever you're located. So I've got a few new positions, depending on whenever you last saw me. So I've still got my gold long positions. These are really small sizes. I can go over this. We discussed it last week. But if anyone wants to know exactly what's going on here, I'm happy to explain. But yeah, I'm still long gold, so no changes on this one, although we have had a little bit of upside on optimism around the Middle East. Pound yen, I went long this morning. So it's currently hovering around entry. There's, really not much really to discuss on this one. So we were watching this one over the past 1 to 2 weeks or so. Fib from the low to the high, pulled back into the fib zone here, the 50% retracement, previous high on the left, and we're in this H4 bullish trend. So technically it looks great. We'll move on to the edge finder in a second. So pound yen long and euro cad long actually is an odd one because last week I had a pending order on cad yen, and I said that I was going to cancel the order on stream because I wasn't really happy with the strength that oil was going in. The way oil was going with the strength and momentum to the upside. However, completely forgot to do that. And then Friday evening, I think I got triggered in. And then, woke up this morning. It's doing quite well, obviously, on oil being pressured to the downside and CAD weakness. So that one's quite nice. But yeah, that's about it in terms of what's going on in my portfolio at the moment. Bears sell gold every day. Bulls can come back after 2030. Tricky one. I'm not 100% sure on that one. Jeremy, good to see you, my friend. Hope you're well. Hope you had a good weekend. Euro New Zealand's bullish. No, definitely not. Chelsea. I'm not sure what that's about, Samuel. Gold bulls are ready to take more losses during the month. NDT. I've seen you saying this quite a few times, and I think you were saying it last week as well. At this point, it's starting to seem like you're trying to convince yourself rather than trying to convince me, because I'm not sure why you keep trying to reiterate gold bearishness. Think Russell 2000 is bull too? I don't know. We'll have a look at all these things. We've definitely got some interesting things, although I am quite glad the chat seems to have improved. I was watching when Marco was on. I was in the back room, and there were some interesting things here. Hey, Marco, can you check? No, sorry, that's the wrong one. Here. Will you give any trade? And then there was, do you live trade? And there's, can you change the chart colors? Like, oh, Jesus Christ, people are here for the wrong reasons. Okay. LMAO, so many people, so many bull and bear cope on gold, straight up capulation. Love it. It's 100% a bottom. I'm not sure it's 100% a bottom either. We'll go over gold for sure. We can go into it a bit more depth in a second. Anything gold short term? Yeah, we can go over it. Pound New Zealand sell cut on Friday to protect from weekend gap. Now going going south. Interesting. Yeah, well, looks like you did the right thing. Oh no, sorry, did the wrong thing, but right thing in principle. Is it me or can I not hear you? Let me turn up my sound. Bear with me. Hold on. I'll turn up my audio. Although actually it should be fine, I think. Yeah, it should be fine. But if anyone else can't hear me, let me know, or if it's really quiet. Okay, right, let's get into the charts, because otherwise I'm going to sit here just reading messages for the next hour. Sentiment tracking, never do me wrong. Fair point. Audio is fine. Okay, thanks, Sluggy. Yeah, I guess it is just you then, Paul. Sluggy, hello. Okay, right, let's get into the market. So gold seems to be a hot topic, as always. So what's going on with gold? We've got, at the moment, actually a relatively decent landscape. So we've obviously had the de-escalation sentiment, a bit of optimism around the Middle East, which is good. So that has driven oil lower, gold higher, dollar lower, typical dynamics. The same dynamic we've been seeing. We have escalations, oil's up, gold's down, de-escalations, vice versa. We should all be aware of that relationship by now. So obviously we gapped up on the back of that news over the weekend. So that's one thing that we can keep in mind. Okay, well, that environment that we've got might be cooling off a little bit. And the reason that might be cooling off is because if we are getting de-escalations and possible peace talks and so on, then likely we're going to get the Straits of Hormuz to reopen, which would then send inflation expectations lower. It would send yields lower, and it would send central bank hiking ideas lower as well, or expectations lower. So that's one thing. The other aspect of this is the US dollar itself, or the US economy. So what we've got here is a score of 40. So inherently, this is bullish for gold and bearish for the dollar. Again, that's just the relationship we've got here. So we had lower or cooler, cooler labor data. We had cooler inflation data. We've had cooler PMIs, manufacturing and services. So the US dollar isn't looking great. We've got yields that are heading a little bit lower on the day. We've got gold that's coming lower. So again, overall at the moment, gold is seeming fine. In terms of gold going lower, even lower, I only really see that if we don't see de-escalations in the Middle East. We see oil continuing to climb, and that puts the Fed in a position where they don't have really another choice other than to hike rates. And even in that situation, it might not be that bad for gold, because it would be a situation that's based on a geopolitical event that could unwind very quickly, or has the potential to unwind very quickly, and also a very expected thing. So that's one part of gold at the moment. On a technical side, I also think it looks okay. So we've come down to around 4,000, good psychological round number. We've also hit this daily and weekly levels of support, seen rejections to the upside, again, pretty good. Rejections to the downside, no attempts to go higher. Decent, bit of sentiment going on there, but we are still in a push and pull between the buyers and sellers, bulls and bears. I think we've got two aspects going on, which is very much where the chat is actually, I think, where we've got people saying gold is bearish because of whatever their reasons are, very likely the Middle East situation, and obviously the higher time frame trends here. Then we've got people that are like me and maybe shorter term traders as well that are viewing this as actually quite a good buying opportunity. This is a 30% discount on gold's all-time high. Again, we've got a really nice key level and a really nice round number psychological level as well. And again, Middle East seeming like it's calming down, or potentially calming down. So that's currently my view, which is why I'm looking to be a buyer. I think that gold has an opportunity at the moment where it's a case of, yes, you might have short-term pain. It might not be a case of gold comes down to 4,000, double bottoms, and then rallies back towards, 6,000, for example. It might be more of a case of, okay, we've had a bit of a pause, a bit of indecision. Okay, gold might come a bit lower, then continue higher, or it might continue down to 3,500. It doesn't really matter. And this is exactly what I'm positioned for. I don't really care what gold does over the next 2 weeks or a month, because I've got very small sizes. I've got staggered entries every $100. So I'm happy to just sit through it. If this comes lower, perfect, because then I get my positions activated and filled. If not, okay, fine, I've avoided some pain. And that would actually be a little bit of the worst situation, is if gold rallies from here for me personally, because I've only got 2 positions active and it's 0.02 combined. So the position's too small really for me to care in any way. Where do you hope to take profit on gold? I don't hope to take profit on gold. It's more a case of just letting it run. If we get towards 5,500, I'll cut a little bit of the position. The issue is, at the moment, because it's still in a very early phase, I need to see a bit more of a directional move, and then I can really solidify the plan. So the idea, obviously, is I want to see gold at 3,500. And that, again, would activate these positions. And then I could afford to trim some positions as gold starts coming towards its previous all-time highs and above. However, if it's just these two positions, then likely I actually just want to hold them for as long as possible. Again, because the size is so small, the best I can do is cut 50% of the trade. You see what I'm saying? I don't have the room to cut 0.2, for example. So that's the idea, really. It's just a case of trying to figure out, well, not figure out, but waiting to see what happens and which positions get activated, and then figuring out where exactly I want to take profits based on those. Whatever is happening, oil down 8% already. Good morning, shakes. Yes. Well, that's because of the headlines we had about sort of de-escalation talks. All who wanted gold already bought after war ends. Who's new to buy gold? It just doesn't really make much sense. I mean, you could say the same thing, down here. It's like, okay, well, everyone's bought gold. There's no one left on the planet to buy gold. So surely now it should crash. Well, not necessarily. That's not really how it works, to be honest. It's not a case of, okay, gold's had a 30% drop. There is no one left to buy gold. Yeah, that's an interesting take. Until gold breaks 4,200, I'm not neutral. Interesting. How is open interest and net positioning doing on gold? We can take a look. Actually, we'll do COT history so we can get a bit more of a holistic view. Gold here. So we don't actually have open interest on here. But what we do have, let me just figure this out. So net change actually not looking too great. So we had negative 1%, negative 0.72, and then negative 0.22. So overall bearish net changes. What are the changes here? So reduction in long contracts on last week's release and this week's. This week wasn't too bad, it was only negative 0.22, but it's obviously a bit of a sign of the sentiment here. Long percentage remains quite convincing though, almost at 85%. Short percent is quite minor at 15. So yeah, overall it doesn't look too bad, but we have seen some minor sell-offs in the CO2 data, which is, again, it's quite natural. So doesn't tell me much. But there you go. Oh, you're neutral. Okay, I understand, Sluggy. I was a bit confused, but I wasn't going to push it. Thoughts on ETH? Samuel, I'll be honest, my friend. I cannot give you ETH. I'm not a crypto guy. I don't really know anything about it. We could look at the Bitcoin technicals, but other than that, I can't really tell you that much because I can give you the ETH fundamentals, technicals as well. But on like the inner workings of crypto, that's just not my area. So we can take a quick look. I mean, it looks basically the same as Bitcoin in fairness, really. So down at quite a nice level here throughout the weekly time frame. So decent level of support on the weekly, something to keep in mind. However, the daily is extremely bearish. I wouldn't want to be buying into this. And it's kind of the same thing with Bitcoin. So this analysis basically goes hand in hand, really. And what we are seeing is we had the sort of death cross, golden cross, whatever type of terminology you want to use, double topped here, rejections of the moving averages, attempted to pull back here, maintained downtrend, lower high. So now it's really a case of, if you are a bull, you would want to see this 200 moving average break, and you want to obviously see higher highs printed. However, I think the most likely situation, based on just technicals, again, is actually something more like this, and we're just following the trend lower. But yeah, other than that, I really can't give you too much. Again, crypto is just not my thing. See, it might even be some sort of fib pullback here. Hi, James. When would you consider an SL too big for a swing trade? For example, in percent value. I don't really work off percent values in terms of price movements, but I would consider a stop loss too large, really based on the risk reward. So let's say, actually, let's just use this example here. So let's say we were going short on ETH and I wanted a stop loss above the previous high, which is very normal. That's quite a standard way to trade. But then my take profit, might have to be here, for example. So now my stop's too big, but there is nowhere really for me to put it. Maybe here, this would be super aggressive. But that would then also allow a little bit of room for the 200. So it's more a case of very discretional. I'm not a very mechanical trader. I don't have an if-then statement for every single situation, but it's more a case of, okay, well, if my stop loss kind of my take profit has to be in one place, generally speaking, or it's likely going to have to be a case if I take profits here. So yeah, that's not going to work because it's negative R&R. I don't like to take negative R&R trades. At worst, I'll take a 1-to-1. So in that case, I might have to tighten it to be a 1-to-1, or again, I could make it more aggressive, something like this. But yeah, again, it's really discretionary. It's more just based on how I view the markets and the structure of my risk reward. Currently day trading gold and base metals. Any suggestions on something alternative to take a look at given the current state of the market? It depends how quick you are. So oil could be quite an interesting one to be a day trader, just because you are seeing quite nice fluctuations intraday. But again, you would have to be very quick with the newswire. So you'd have to have financial juice or something along those lines to obviously keep you in good trades and away from bad trades. Gold, you already trade gold. I'll be honest, that's kind of it. I'm not seeing very much. I'd normally say something like futures. You could trade NQ or ES or something like that. But these markets just aren't doing anything. They've been sideways for, how long has it been now? Since the 11th of May, the Nasdaq has done nothing. It's just sideways. So yeah, I honestly, for futures or the indices, index markets, I would just stay away. You invest in clay. Okay. I don't think I've ever heard anyone invest in clay, but if it works for you. Phil says, hello, James. Our GJ trade is not looking good. What do you mean our GJ trade? Do you mean my GJ trade that you followed? What do you mean it's not looking good? My friend, it's an entry. I mean, it's like 0.1% drawdown. Brother, relax. It's all good. So gold, yeah, gold's not doing anything. So going forwards this week, what are we looking at? Not much. CAD yen was also on the watch list. So I was looking between CAD yen and pound yen. Which one did I want to take? Well, I prefer pound yen. I don't like the Canadian dollar. I do agree with what Marco said earlier. I think the Canadian dollar is weaker long term. I also do think the pound is weaker long term as well. Not necessarily versus the yen, but I'm more talking broadly. I don't really like either of the currencies. But what we see on the Edge Finder here is pound yen. It's got 11, CAD yen's got 9. So I'll go with my typical system, which is Edge Finder technicals. So in this case, pound yen took the biscuit. But yeah, CAD yen technically actually looks a lot better here. So I maybe did make the wrong decision in hindsight, of course. So yeah, there's not much I can do about that. But I do like them both. So it'd be a case of having to just sit and wait and see what happens. What else do we have? So yen pairs are getting quite a nice reading. So pound yen, CAD yen, New Zealand dollar yen, and Swiss yen all getting bullish readings. Australian dollar yen as well. Just thinking if there's anything specifically that's piquing my interest. The FTSE's been catching quite a nice bullish reading for quite some time. I think past 3 weeks or so. It's been doing quite well on the Edge Finder, but I don't think the FTSE's really worth paying attention to. We can move on to the FTSE in a second, though. I'm getting ahead of myself. Euro New Zealand was interesting. Someone pointed this out last week on stream, and I added it to my watch list because I didn't really see it at the time. But it's not really the way I trade. It's based on the 38.2 fib level. I don't use that typically. I normally use a 50% and 61.8. However, because it's bearish on the Edge Finder, I would make a little bit of an exception because along with that, I've also got the technicals that are decent. They're okay here. But the break, retest of previous structure on the left. The downside really comes with the previous low here. So the risk reward is not very asymmetric, if you will. So it would be a case of really you kind of would have to see this low break, or at least I would for the way I trade. Stop loss above the 61.8 fib, and that would allow room for these moving averages. But yeah, overall, I do quite like it, but it's just the entry feels a little bit precarious. It's definitely not ideal for me right now. And the Nikkei, Sluggy will like this one. I know me and Sluggy are always talking about the Nikkei. I'll get long, and Sluggies are like, "Oh, I've already bought last week." It's like, "Oh, I'm a week behind him." But yeah, so Nikkei is also bearish on the Edge Finder. So overall, I am going in with that bearish lean. The H4 moving averages here are bearish, so it's looking fine on a trend basis. We've got the high to the low. We could look for a 50% pullback into the fib. It would line up previous structure on the left. So yeah, again, mainly just following the trend, looking for that break and retest into the fib level. And also same thing as Euro New Zealand, we'd have to see that sort of break of this prior low, retest, maybe actually a scale in at this point as well, and then continue lower from there. For some reason, then Matt, I read your name's Matt Damon, and I got a little bit excited. I was like, oh my god, have we got a celebrity in here? But then I realized it's just my acute dyslexia. I just got here. I sold USD JPY an hour ago. I'm on a loss. Of course you're on a loss. It's a silly trade. I'm sorry. I know that probably sounded really mean, but that's a very aggressive play to make. Yeah, I think the issue with dollar yen, was it dollar yen you said? Yeah, dollar yen. Why would you sell it? What is possibly the reason? You know, I understand the idea of maybe the MOF will intervene, maybe the Bank of Japan will hike rates, but that's not. There's no definitive idea there. That's a big maybe, a big question mark, and the markets aren't pricing that in. The markets are largely priced in a hold. So unless you can hold on to that losing trade till Friday when we actually get the decision and hope you're right, then you know what. I cannot fathom why you would go short. And again, I'm not trying to be mean, but when you're taking trades, you need to be able to actually think about what you're doing. It's not a case of, oh, dollar yen's risen, the Bank of Japan might hike rates, the MOF might intervene, I'm going to take a short position. You can't put money on those ideas. Sluggy, you like New Zealand yen? Fair enough. Oh, by the way, last thing I'll say to that, you could be right, is what I was going to say. You could be completely correct that we get to Friday and the Bank of Japan do a surprise rate hike, we see a massive repricing and dollar yen does head lower. But again, it's a case of, can you hold on to that losing trade till Friday? That only you can answer. I've got no idea. I don't know what your stop loss is, but that's something you really need to consider, because that's really the soonest catalyst that we have for definite. Again, you could also get that intervention. You could get it in an hour. You could get it next week. It could be next month. You've got no idea. So you need to think a bit more critically. You mentioned pound yen. Why? Because my system told me to. So pound yen's bullish on the edge finder. Automatic. Yes, I want to be a buyer. We've got a carry trade dynamic, get paid with swaps. It's fantastic. My technical analysis or my technical approach came in here. Fit from the low to the high, pull back into 50% retracement, lines up previous structure on the left, bullish trend on the H4. Overall, very simple, standard trade. This is a trade I would take 10 times out of 10 on any other market. So it doesn't matter whether it's pound yen, euro dollar, you know, live cattle, whatever. 1.8 on Euro New Zealand interests me a lot. Let's have a look at, where was that? We still need to go over euro dollar, but we can have a look at that in a second. What was that? 1.98. Yeah, I mean, it would be nice to get a deeper retracement on Euro New Zealand towards this 50% retracement, but whether we're going to get that or not is a little bit of a tricky one. So I'm not going to hold my breath. It's on the watch list. If it happens, it happens. If not, then cool, whatever. Yeah, it's bearish now. Indeed, it is sluggy. Hi, James. How many swing trades do you average monthly? That's a very good question, actually. I've got no idea off the top of my head. I would say probably 8 on average. That's a complete guess, though, because I would say I normally take 2 per week. Again, on average, it's not every week. But yeah, my swing trades aren't normally that long. It's actually more of like maybe 1 week they'll last, maybe. Sometimes they can last longer. For example, I had a trade on pound Aussie earlier this year. I think that lasted for almost a month, maybe a little bit longer. But yeah, typically speaking, I'd say maybe 6 to 8 per month. We can hear you. I think you're a little bit delayed on the stream, my friend. I asked that question ages ago, but fair enough. I appreciate the answer. GPUSD, he's going to see me reply to that in the next 20 minutes. GPUSD currently sitting on 61% fib level. Edgefinder scanning very bullish. Yeah, it's a little bit of a tricky one because I am short euro dollar and I was looking to send out the signal this morning. Just because I do really like euro dollar shorts. I think even if we put the Iran situation to the side and we this is going to be a long topic, so I'm going to really summarize it here. If we put the Iran situation to the side, the dollar looks really great on the higher time frame. So on the weekly time frame, we've got the really nice trend line. The dollar technicals on the short term look fantastic. We've got the historical pattern here on euro dollar, where we create these lower highs, and the past 2 times we've come down towards parity. So there's the kind of historical idea really with euro dollar. I really think we could just see history repeat. Correction of this left side over here, again, maybe towards sort of 1.055. So yeah, euro dollar is looking really good. I'm in a few short positions on a DCA approach, small size, so I'm letting them run and see how they go. But yeah, but however, as I was actually going to say, in terms of buying the dollar, or sorry, selling the dollar, or buying or selling the dollar, I think it's a little bit risky. I'd rather lean towards being a buyer of the dollar, so selling things like euro dollar and pound dollar, because I'm not really convinced that we're going to see some sort of peace deal within the Middle East, the US, Iran. We've had that headline before and it didn't follow through. So do I want to trust it again? Probably not. I'd rather fade it, I think. So with the edge finder being bullish on pound dollar, and me having a personal bias of being bearish, I can't trade it. It puts me in one of those situations where I'm getting pushed and pulled in different directions. BOJ is notorious for not doing surprises. Yeah, that's the thing. I don't care. I don't care what the Bank of Japan does. They could hike surprisingly, for example. Okay, cool, I'll get stopped out, but they've still got low rates. The Bank of England is projected to hike 1 month or 1 meeting sooner. They've still got higher rates for longer. I don't care if the Bank of Japan hikes rates. You know what I mean? Yeah, short term, it might be a bit skew if it might throw my position off a little bit, but it's not going to change anything. The only real difference, I think, would be when the Bank of Japan does normalize, back towards, let's say, 2.5, 3, or if, I'll use the word if, not when, back towards maybe 2.5 to 3%, then the yield gap will obviously get filled a little bit or narrowed, obviously significantly. Carry trade dynamic will massively die down. We'll see it unwinding. At that point, yeah, sure. But right now, it's just not a problem. Who cares? And again, that's just my point of view. I'm not saying you shouldn't care. I just don't care. Hi, James. I see here that you have so many wide stop losses. Meanwhile, me so very tight. Oh, right. Well, I think it's subjective or discretional, really. I wouldn't call these tight stop losses. I would say they're pretty average or pretty medium sized. You know what I mean? But no, the way I trade the H4, I try to put my stops at prior high or prior low, and that's it. Again, as I spoke about earlier, if the stop is too big, I will reduce it. But yeah, normally this is kind of what I go for, typically speaking, of course. Euro US dollar short makes sense technically, but I was watching it, but not convinced on US dollar strength. Yeah, with the US dollar, I think the key thing is 102. I don't think the markets are really going to be overly bullish on the dollar from a technical point of view, by the way, not fundamental side. But I think it's really because we have to see this 102 level break and hold above, because we've already rejected twice, not 102 here perfectly, but it was the same sort of area or zone. And then we ended up in a 1 year range, and here we've rejected again. So if we break above and hold above, that would be a big technical signal that the dollar is in a good spot to continue higher. And not just that, it would also be a really nice signal that we can continue this pattern that we have historically on the dollar, where we come down to this trend line and every time we just rally. So we've come down again here. We just need to really see that follow through to sort of verify or validate the idea. So yeah, 102 is the big level. That's definitely what I'm watching at the minute. And it does seem like we're there. So far, it seems optimistic. We did have a little bit of a downtrend on the dollar when we had cooler CPI. The labor data wasn't fantastic, but obviously since the re-escalation in the Middle East, we are starting to see the dollar picking back up again, which is nice to see. This week, Bank of Japan make a decision on Friday. Definitely, they will intervene. It's possible they will intervene. I wouldn't say definitely. I don't think it's a good word to say definitely in the markets, but yeah, I would say the possibility, I would say, is maybe like 60%. Euro dollar is a great short, not because of the dollar strength, but euro is overdone with hiking. That is also, yeah, it's an interesting point, Sluggy. Does anyone have any thoughts on SanDisk? There's been a lot of hype around SanDisk recently. I'm fairly sure the stock went parabolic, but I've got no idea. Again, I don't really keep up with the stock market too much. Very much just a currencies boring trader. Marco said exactly the same thing you're saying on buying the dollar. Yeah, I think it's general consensus, really. I know, I'm not sure about Nick, if Nick still is, but I know Nick at one point was very bullish on the dollar. I think he cooled off a little bit. But yeah, I think generally speaking, a lot of the macro guys you see will be either buying it or waiting to be buyers, rather than, I don't think there's really any macro traders right now that are actually trying to sell it actively. And if they are, I'd be very curious as to why. You have the same stop loss with Nick, which is so wide. What is really your basis on stop? It's what I said, Phil. It's stop loss at prior structure, prior low, prior high. That's really all it is. So my approach is take the low, measure the bullish move, fib from the low to the high, enter in the fib zone, stop loss at the low or the fib anchor or the high if I'm selling, and that's it. That's really the only thought process within my stop. I try to also allow room for the 200 moving average because it does very often act as quite a nice dynamic support or resistance. So that's one thing. But yeah, again, it couldn't be more simple. It's just where is previous structure. That's what you said to Marco. 2 other CB hikes, so carry trade lives on. Yeah, that's right, Sluggy. I agree with that. Can you please share your Bollinger Band settings? It's just a 200, my friend. There is no special settings. So it's not like the RSI where I've got my own little thing going on. It's just a 200. EMA or SMA, it really doesn't matter. Again, I wouldn't, if you are using a Bollinger or you're wanting to learn more about it, it's a fantastic tool. It's really cool, but it's not something to rely on very much, especially on lower time frames. You can definitely catch these sort of mean reversion ideas, but the problem is with Bollingers, it's one of those strategies where you can get it right, maybe, you know, let's say 70, 80% of the time, for example's sake. But then there'll be a situation, I don't know, like this, for example, where you get this signal, you know, the market starts breaking above. Okay, great, I'm in profit, fantastic. And then it, you know, oh no, I'm losing. I need to add in. Oh, I'm back to being okay. Oh no, add in. And then, you know, you're going to take a large loss up here. And it's one of those things where it looks fantastic. You know, it looks so easy. Oh, just sell, buy the low and sell the highs. It works until it really doesn't work. And then you're going to be in some serious trouble. However, on higher time frames, like weekly time frame, daily time frame, it's a little bit more reliable. But again, I wouldn't say it's a good signal to actually get into the market. For me, I use it more as a filter to actually stay away. So in this case, for example, again, you could end up selling all of these highs and being in real trouble for what, like a year? That'd been painful. So for me, this is more a case of, oh, we're actually pushing up this Bollinger. I'd rather actually just stay out. You know, I'll wait for it to pull back and then maybe I'll look to be a buyer on the pullback. Okay, so that's that. Let me fix that back. There we go. Do you have a specific time of the day where you execute trades? No. Time is irrelevant, in my opinion. You know, you'll get the scalpers and the day traders that do use time, you know, session times and so on and so on. That's really important for them. But for me, I don't care. I'll execute a trade at 1 a.m. or 3 p.m. or, you know, it doesn't matter. It really doesn't, because, you know, we could say, okay, the opening sessions have what, like half an hour, 30 minutes of volatility or you know, meaningful momentum, maybe a bit longer, give or take on the day. But why does that matter? If I'm looking to be in a trade for the next 1 week, why does the first 30 minutes have any effect? Well, it doesn't really. I might be able to get a bit of a better entry, but I'm not going to wait for that because I could also end up getting a worse entry. Wolf Street Sniper Apparel Street 4821. Yo to you too. That's a really long name, my friend. You could have made that a little bit easier for me. You do this, FM. Is trading your full-time bread and butter? Not really. No, I'll be honest. I don't think it's really anyone's full-time bread and butter. I think trading is a great way to treat it almost like a savings account, if you will. It's more, well, this is my case anyway. I use it more as a way to just put my money into the markets and get it working at a better pace than the S&P. I don't really care about having trading as a full-time job. I actually don't want it as a full-time job. So I've got other things. You know, I've got Elite Traders, I've got mentorships, I've got another business on the side. I do rarely actually these days, but sometimes I'll still do contracting work as a designer and motion designer. So I've got different things going on. You know, I don't think being a full-time, oh, sorry, I don't know if you guys heard that, I just knocked my mic. I don't think being a full-time trader is ever a good idea unless you've got a large amount of money. When I say large, I mean 10 million plus in capital. And the reason is because when you get to that point, you can afford to take, you know, one trade, and that would pay for months of expenses. Whereas if you're trading, you know, 500K, for example, it's a lot of money. Don't get me wrong, it's still good returns. But then what happens if you have a 2-month losing streak or you're break even for 6 months? It does happen, you know, maybe rarely, but it can definitely happen where you go on massive losing streaks, or you just don't make anything for a year, or you have a negative year. I don't want that stress. You know, that's not me. I didn't stop working and build everything I've done for myself to then, you know, go back to being stressed about having a losing year in the markets. I'd rather, if you know, at that point, I think I'd rather just work a 9 to 5, be a bit more comfortable. James, do you adjust SL levels before major risk events? No. No, I'm a very chill trader. I don't care about time. I don't really care about news events. You know, it's cool. The only thing with news events, I don't enter the market 24 hours, generally speaking, 24 hours ahead of it. So for example, if, you know, let's say we had NFP tomorrow, I'm not going to go and enter pound dollar right now because there's just no point. I'd rather wait to see what the data is. But I think I said this last time, if you're one of those traders that always says, oh, it's a red folder day tomorrow, or it's high impact news today, you're never going to get a position. You'll always be sat on the sidelines. You're going to miss everything. I think if you've got a well-reasoned trade, you've got your thesis, whether it's the edge finder or whatever it is, take the trade. You know, anything could happen. A job is the best profit for sure. Depends what job. Yeah, I know, especially in the UK, a lot of people that do have jobs are really struggling at the moment. 10 million people trading 100K quite comfortably. 10 million is the goal. I don't know anyone that's trading on 100K comfortably. I mean, think of it this way: 100K, let's assume dollars. And you take 1% risk. It's $1,000 risk. So maybe you get a 1 to 2. That's $2,000. So let's say you average. Let's say you're really good and you average 3% a month. So you get $3,000 a month. In the UK, that's 2,600, 2,700. That's not nearly enough. That's kind of, it's okay, but it's not nearly enough. To say that you spend so much stress and time, got $100,000 tied in trading, it's not enough. So you may as well have something else going on, because trading isn't full time anyway. You don't need to be sat at the charts all day, every day. You can very easily spend the weekend doing a bit of research. You know, throughout the week, check the edge finder, make sure you're still on the right side of the markets, and that's kind of it. You've got a lot of time to do other things and generate more income. Bro, you going on a rant? Yeah, I am, because I don't really have much else to talk about, and I'm kind of just reacting to the chat. It's what a lot of these streams go on. But yeah, I do apologize if I'm getting a bit bored. We can move on for sure. Scared money don't make money, for sure. That's absolutely true. Hello, James. Hello to you too. In Philippines, James, 3K is enough. Yeah, well, all right, yeah, maybe I should have specified. I'm talking about the UK specifically, or America. I don't think 2K in America is really that much either. But yeah, obviously if you're in a, what's the right word? A country where dollars are more valuable, then yeah, of course. Okay, so we'll move on, because yeah, that guy was right. I am ranting, so I do apologize. It happens now and again. I get distracted and we end up talking about things that maybe are a bit irrelevant. So we've got about 20 minutes left. What else do we want to discuss? So we discussed CAD Yen, Euro New Zealand, Nikkei, Euro Dollar. Nikkei does look quite good, but it's just a kid. Do I want to be selling the Nikkei right now? I don't think I do. I've already got exposure to the yen, obviously with my pound yen position. So I think I'd rather just avoid it until after the news. When I say the news, I mean we've got unemployment and interest rate on Friday for Japan. So I'm not going to get overexposed and over leveraged on those markets. I'd rather wait. Again, I'm in the yen already, so I've already got my exposure to Japan for now. Even 1K is enough here in Philippines. Maybe I should move to the Philippines. Sounds good. I'm in Jamaica. 2,000 USD a month is very comfortable. Okay, yeah. Well, again, this is what I was saying. I probably should have been more specific. I was talking more about the Western world. So I apologize if it was offensive to anyone. I didn't mean to sort of, devalue money for anyone, but it is what it is. In places where I live and a lot of my friends live and things, it's just not. It's not going to work really. Put it this way: when I was living in London, I had a 1-bed studio flat. So what a studio flat basically is, where your whole living quarters is basically one room. That costed £1,400, so about $1,900 a month. Just to put it in perspective about what I mean. Anyway, we'll move on. Again, I know I keep yapping about the same things. Much love to you as well, Fiscal. Isaac. Oh, I was very confused. I was like, who's Isaac? Okay, dollar CAD. Interesting. Well, dollar CAD. What can we look at here? I know it was getting a bearish reading on the edge finder at one point, but however, it doesn't seem like that's the case anymore, which is good because I was looking to go short and I decided to make an executive decision to not do that, which does seem to have been the right call. So something I was looking at, and the reason I didn't go short is because of the daily time frame. So we have previous support turned previous resistance, and now we're in this daily bullish trend. The RSI was oversold at this point here. So actually the technicals looked really good, and the edge finder score wasn't that convincing. So I think being a buyer could be very beneficial. The problem is you're playing it kind of both ways, really. So if we get escalations in the Middle East, we're going to see oil continue to climb. That is by proxy or by default going to strengthen the Canadian dollar and strengthen the US dollar. So you'd be trading two strong currencies against each other, and then obviously two weak currencies on de-escalations. However, we've seen clearly here the escalations are more favorable for dollar CAD to the upside, whereas the de-escalations are less favorable or more favorable to the downside. So if you're banking on escalations, I think dollar CAD long could be a good play. If you're banking on de-escalations, being short could be quite beneficial. So that one, I think, would really come down to what you think is going to happen. I don't really have any interest in this market right now. It's not going to work in California either. Yeah, sad. I mean, my grandparents bought their house for a can of beans. James, whereabouts are you now? I can't disclose that information, Jeremy. I'm in the north of England. That's all I can say. Australian US dollar. I'll be honest, I'm not really convinced on this one. We were looking at it last week, I think. Last week, maybe the week before at this point. It looked quite nice. I think actually Christoph in the chat brought this to my attention. So we had a really good technical setup here. But then again, the issue really is that the dollar's been doing quite well. I'm quite optimistic on the dollar. I don't really want to be a seller. I'm not really that happy with the Australian dollar. I mean, I'm not saying I'm bearish on the Australian dollar, but I don't like the Australian dollar more than I like the US dollar. Does that make sense? So being a buyer doesn't really express my views or opinions. It's just not worth really what I'm interested in. I wasn't asking for your postcode yet. No, don't worry. It's all good, Jeremy. Would you handle the risk management on a prop account challenge different than funded? Okay, so would I handle risk differently on a challenge account compared to a funded or personal? Yes. So personally, I don't mind being a lot heavier on risk on a challenge because it's a challenge. I've got it's fine. But again, that comes really down to your bankroll and your personal wants and needs and things. Some people take a lot of time. I know a guy that took 8 months to pass an account because he wanted to keep it and he wanted it to be more of a long-term thing. Whereas the way I view prop firm accounts is more a case of I'm happy to take 2 trades. If they both lose, then I'll blow the account. If not, fantastic, I passed, and do it within a week because I don't want to sit there on a demo account for a week or even longer with still the possibility of fail. I'd rather just get it over and done with. Can you analyze the Nasdaq? Wow, that's a name I've not seen in a while. Prizak, Phantom. I've not seen you in ages. Oh, it feels like a long time anyway. Nasdaq. Yeah. So the US markets are tricky. I would quite like to be a seller, and that also comes back to the idea that the US yields are elevated. The US dollar is doing quite well. It does seem like the Fed is going to hike rates. So, yeah, I think with those things accounted for, and the idea that we've had, we had a fantastic rally that's had really no correction. We've had really little pullback here. So I would quite like to be a short seller at some point. But the question really is where. Now, I should, in hindsight, have gotten in on this fib pullback. I didn't do it. And the reason I didn't do it is because the edge finder has no reading. So the only bearish reading really is the Nikkei. So if I wanted to express the idea of going short on the indices market, I would have to go to the Nikkei, not the US markets at the moment. Now, I do think there are larger problems here. We've got lots of issues that I don't really view as very healthy. Things like SpaceX, OpenAI, the AI bubble in general, the valuations, all these types of things I just think are real issues. But as I said last time, they're things no retail trade, or in fact, barely any retail traders can do anything about those things. Someone asked last week about this idea that, we as retail traders could have an amazing idea. I could sit here and tell all of you about this massive inefficiency in the market, something that has to get repriced, some, groundbreaking research. It doesn't matter because the market, we don't move markets. So do you see what I'm saying? So we would have to wait for other traders, the smarter traders, the institutional traders. We'd have to really wait for them to figure that out. And then we can obviously express the same idea, jumping on the back of their breadcrumbs. But for now, we can't do anything. And that's where I'm at with this sort of AI situation. I can't do anything. So I'm just waiting. I'm waiting for some sort of signal, whether it's a catalyst with some sort of definitive bubble pop or whatever it may be. I don't know what that will be yet. It could be anything. But yeah, that's currently the situation I'm in. So yeah. How have you been keeping, James? I've been very busy still listening in. Fantastic. Well, being busy is better than being bored, so I'm happy for you. I'm good, though. Thank you very much. Still here, still kicking around. Not sure for how much longer, but yeah, still here. Although I might get a suspension off the stream, so I think I've been yapping a bit too much on this one. What are we talking about here? So we've done Nasdaq, the S&P, Pound Aussie. What can we see on Pound Aussie? That's a good one. I'll be honest, I don't think I've really got anything for the Pound Aussie. We can see what the edge finder's got, but personally, I don't really have a bias either way. So there's a score of 3. So it seems to have actually been hovering relatively bullish. I was a buyer of Pound Aussie, like 3 weeks ago, maybe a bit longer, give or take. It didn't work out, obviously. But yeah, I think I'm a little bit torn, actually, because we've got economic growth, jobs market, and inflation that are bullish. So we've got the 3 pillars that I like to talk about, which are the 3 fundamental sort of categories. They're all bullish, which is what I like to see. I don't really care about retail sentiment. That's not a huge deal for me, to be honest. Institutional activity is bullish. I also don't really care about the technical signal because I find my own technicals. Personally, for me, it's just not a big deal. So actually, the 4 things I kind of do care about, which are these, are kind of aligned to be a buyer. But then I look at the technicals here. The weekly looks horrible. We've double topped here. We've had a really bearish engulfing weekly candle last week. The daily in this really strong downtrend, equal highs here, and then again continuation lower. It's not looking good. And then the H4 has flipped. So again, this puts me in a position where I'm getting pulled to be a seller, pulled to be a buyer on the edge finder, and then pushed to be a seller on the technical side. So in this case, I would have to just wait. So I'm not going to counter trade the edge finder or the fundamentals. That just doesn't make sense. The H4 doesn't look like he's going to flip bullish. So I'd have to wait for the daily, for the H4 to create a new high, break the previous highs, pull back, establish some sort of bullish trend moving averages, and then I could get in. However, it doesn't really look like that's going to happen at the moment. So yeah, nothing I can do here, unfortunately. Have you already been approached by a popular podcast for an interview? No, never. I think the only podcast I've ever done, or whatever you want to call it, was with the trading nut. But that guy has everyone on. You know, he'll have he'll you know, your granddad could write to him and he'll host him. So it doesn't really mean much. But yeah, no, never. I don't think I'm big enough for those things. I'm still a very small fish. You know, there's people, you know, like Nick, for example. I think he's approaching 600,000 subscribers. I'm not even at 5,000 yet. You know what I mean? Just put it in perspective. I'm a tiny fish. I don't think these people know who I am, which is fine. I'm not that bothered. Have you already? Oh, that was the same question. Okay. So I'm just thinking if there's anything. James, care about retail sentiment personally. That's fair enough, Sluggy. I'm not saying it's useless. I'm just saying for me, it's just not a huge deal. The way I like to look at it is like a cake. You know, you've got technicals actually like kind of dusting. You know, it's nice to have, but not a huge problem. Retail sentiment's like the cherry. It's like if it's there, cool. I actually don't really like cherries, but if it's there, cool. If not, whatever. I probably won't even notice. Institutional activities like the frosting. It's like, okay, I like the frosting on my cake, so that's good to have. If not, it's going to be a bit dry and I'm not sure I like that one. Fundamentals, like, you know, the ingredients, you have to have those in there. Do you see what I'm saying? That's the way I see it. So it's all in the case of importance and layers. So yeah, that's my philosophy behind that. Gold seems to kind of flattening out. Actually, let's just do a quick review on oil. I'm not sure. Yeah, oil seems to be still in a bullish trend here on the H4. It'll be interesting to see what happens this week, whether we're going to have re-escalations and continuation higher, because if that does happen, I think there's going to be real troubles. Yeah, I think there's going to be real troubles ahead in that case, because oil reserves will continue to get depleted. Energy prices will continue to rocket to the upside, obviously, and it's just going to be a world of pain for everyone, not just people or you know, households, but also governments, businesses. It's going to be a real problem. So I think it's really in the best intention to get this war over with, but whether they actually can do that realistically, I don't know, because it's not. I think Nick said it well actually the other day. I think Nick was I can't remember, but I remember Nick said it, something about the fact that normally, you know, we expect Taco Trump. You know, that's kind of what he's famous for now. You know, we had the tariffs, it was Taco Trump. It wasn't a surprise. But in this case, this isn't just Trump. We've also got Iran. You know, this is a two-way street. So what can, you know, Trump can say something, but it doesn't mean that's what's going to happen. So yeah, it's a tricky situation, I think. Sentiment analysis slept on. No, I do like sentiment analysis. Don't let me misguide you on that one. I do like COT data, but I don't really care about the 1 week change. I like to watch on the Edge Finder, I like the COT history, because that gives me a bit more of an idea of the sentiment over a longer period of time. James, you're big enough for us here. It's all good, Potato. I appreciate the support, but don't hold it against me for the yapping I've done today. Again, it just happens sometimes. Yeah, I'm on here for an hour every weekday, so you're gonna have times where I just talk. It could be good trading stuff, or it could just be absolute nonsense. You never know what you're gonna get, and that's the beauty of it. To be fair, there is probably zero correlation between the number of subscribers someone has and their ability to trade, which are fantastic and deserve continued audience growth. Thank you very much, Nick, or whoever wrote that. I appreciate the kind words. Simo, hello, good to see you. Hope you're well. The whole team, yeah. That's I say this all the time. I don't want to glaze, as the Gen Z kids say, but yeah, Nick and the A1 guys have done an absolutely fantastic job of building the community. Not just the guests, but also you guys. You know, there's an absolute cesspit on social media of just traders that have no idea what's going on. They call everything manipulation and algos and liquidity sweeps and all this nonsense. And you can't tell them different, because they won't listen, and they'll just say that you don't know what's going on either. But somehow Nick has completely broken apart and found the rare 5% of people actually understand. Anyway, what's going on here? COT, I like the accumulation week to week, not just the change. Yeah, that's kind of what I'm talking about, Simo. Week on week change is cool. You know, it's interesting to see, but it's not. I like the full picture, is what I'm trying to say. You know, it's like show me a picture of. I don't know. You know what? Let's ignore that. I'm getting to the end of my segment. I'm getting a bit fatigued. Do I use simple EMA or exponential? I use exponential. No, there's no reason for it. And I get that question. What's the difference? There is really not much of a difference. And the only reason I use EMAs is just because that's what I always have used. When I was taught the EMA sort of approach and use case, I was taught with the person using EMAs. So I've just always stuck to it. But yeah, the concept is the same with all of them, whether you use EMAs, SMAs, or whatever else there is out there. You said it well about COT because week to week there's a delay in data. Yeah, that's also a good point. Yeah. Did I start positioning? Yes. So I am in pound yen. Finally, I was sat here last week for, I think, all week saying, oh, I didn't get into pound yen. Typically, I did get into pound yen now, and it's losing. I'm underwater a little bit. But it's okay. Not underwater massively. It's just a little paddling pool so far. Hopefully it doesn't turn into the deep end of the pool and the stops hit, but it is what it is. Euro CAD seems to be turning around a little bit. Not a huge surprise. It's fine. I might move the stop to break even after the stream. And gold's doing okay. So as I spoke about earlier in the stream, the thesis behind gold isn't a short-term thing. So please don't look at this and try and copy it. It very likely won't end well for you based on gold's value and lot size and things. So don't take this as a signal by any means. This is more of a way for me to express my long-term favor for gold whilst keeping my risk very small. So rather than going in with just a stop loss here, for example, entry here and take profits up here, and this is, let's say, 1% risk, I don't really want to do that because actually I do kind of have an idea that gold might continue lower. So the best thing I can do is say, okay, I do like gold. I do want to hold gold, but I don't want to be exposed to the short-term nonsense. You know what I mean? So I'd actually rather use this downside as an opportunity to get into that long position through staggered positions, all low risk, and build what we call an average price. And then, if gold doesn't rally for the next 12 months, it's okay. I've built a base, and what I can do is if it continues lower, I can cut the higher positions and add in lower. And that's the approach I'm going with. It's called DCA. That's probably not the best explanation I could give you, but I'm running out of time here. We do have, I think, Alan coming to take over. Let me just double check. It's a lot easier now. We've got a set schedule. I'm like 99% sure it's Alan, but I'll check before I say so. Yes, so we've got Alan. Hold on, I'm just trying to figure this out. Yeah, so we've got Alan coming on. Then we've got Marco and Alan, it seems, at one point. And then we've got Nick coming on. So you'll have Nick soon. But in the meantime, between now and then, you'll have Alan and Marco. In Trump's speech, did he say the war will end and oil will come down? Do you think the market is pricing in an end to the war? He didn't say, no, he didn't say there's going to be an end. I actually can't remember word for word what he did say or what actually the headline said. Let me just take a very quick look and see if I can find what was the headline. Actually, I've got it in my Discord. Just bear with me for 1 second so I can actually give you the proper one here. Crude oil prices declined 5% following a pause in US-Iran hostilities over the weekend. European gas prices dropped 7.7% at the open as US and Iran extend war pause. Oh, and here, US pauses Iran strikes as Oman pursues Hormuz transit deal. So that's the headlines I've got anyway. But yeah, in terms of what's going to happen next, I don't know. I can't tell you, unfortunately. I would expect oil to continue higher. And the reason is because I don't know if the market's going to trust these headlines. We've had the peace deal talks before, or the pause talks before. It didn't lead to anything. Eventually, I would expect this whole mess to end. But again, when is that going to happen? Could this go on for another 2 years? I think there is a possibility of that. Yes, absolutely. But is that the case? I don't know. No one could tell you that. So I think the best case really, or the best thing to do is actually just stay away. And this is what I've been doing. I've been telling you guys I don't really care about the headlines because there's nothing I can do about it. So I'm going to trade as normal, obviously accounting for them, but not trying to avoid everything or to jump into everything. It's more a case of, okay, this is the headline. This is its impact. What's the scenario or situation overall? Does it impact my open trades? Does it impact my trades I was going to take? If not, okay, green light, we can continue as we were. And yeah, that's basically it. Anyway, ladies and gentlemen, I'm going to head off because we do have Alan Price coming to take over the show. Ladies and gentlemen, I hope you all have a fantastic day. Also, just a quick one. That's not martingale or grid. That's a completely different approach. Martingale is doubling position sizes every time you lose. I'm doing a dollar cost average. It's more of an investment approach. Anyway, guys, have a fantastic day. Thank you for being here. Don't get margin called. Stay safe. I'll see you all tomorrow. Yeah, have a good one.
Today's video is sponsored by 8cap. And did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everyone. Good evening, good afternoon, wherever you guys are watching today. As the ad said, go ahead and check out ACAP if you are looking to switch brokerages. Very cool thing that they got going on where you essentially get a great brokerage and also the opportunity to own the Edge Finder. So get two birds with one stone. Yeah, that's how you say it. Yeah, so let's go ahead and talk about what's going on here. Good morning, everyone, again, wherever you guys are watching. One Opportunity, Simo, Jeremy, I know you guys are in there, all the regulars. Good to see you. Happy Monday. It seems like, hopefully, this trading week will be a lot more fun and active than last week. Last week really had nothing going on, I would say, on the U.S. macro side of things. And this week we are picking things up. We have FOMC on Wednesday, the rate statement as well. You have some BOE stuff going on, their rate statement and monetary policy, forward guidance and everything. Bank of Japan, right? Big one there. So we have a lot of things going on. And to start the week off, we have had, once again, some kind of a halt in U.S. strike. So the U.S. was going 13 days at it with Iran, and then they paused it. So did Iran. And so you're seeing some risk on today. We've seen that very, very, very often, right? Going into the weekend, things are hot, things are elevated. And then right when the market opens on Monday or Tuesday, things start to get a lot better on the optimistic side of things. So we're seeing oil, which is a big one here, rejecting this bearish trend line that I drew up on Friday or Thursday. We're holding that level here. We are now back below that $84, $85 mark, which to me, remember, this was that level of support here during the war. I was like, I really want to see this thing below and hold below to make sure that, you know, the price of oil is trending in the bearish direction. So too early to tell, honestly, in my personal opinion. There's a very strong likelihood that you can probably see oil back above to 88, 90 or whatever. But again, I would like to see this hold firm below. So if we get a good close here on oil today, maybe have a retest of this level and continue lower, then perhaps that can go ahead and ease some of the inflation concerns around the world. And then perhaps you see more rate repricing. But for now, I'm going to keep an eye on this one here. Yields today with the 10-year down almost 1%, 0.9. Softer, but again, look at this chart, guys. If we just zoom out here, this is still very elevated yields, right? The start of the war was all the way right here, and we are way above here. So we still have a lot of progress to do if you want to see a actual path of rate cuts. I don't think we're going to see rate cuts anytime soon. I think the more dovish stance would be rate holds. But again, we'll see here. 2-year, still way up there as well. So we have some progress to do. On the global front, you are seeing yields across the world. Aussie, pound, US, New Zealand, Canada, Europe, all trending lower today. So that's good to see, right? There's really no outliers. I can see, let's see. Yeah, there's really no outliers. Everyone's softening up today. Let's actually look at CME Fed Watch tool to see what's going on. This CME Fed Watch tool has been flip-flopping a lot recently. One day you get crazy odds to the hike side, and then the next day you have odds to the neutral side. All right, it still seems to be the case. So no rate hike this month. Then going into October, right around here, later part of 2026, you have one rate hike and then another possible rate hike in December at the very end of the year. And then from there on out, we're probably going to hold. So that's what the market thinks right now. So nothing much has changed really since Friday on this. As far as new news goes, nothing really going on here today. Yes, some sentiment expectations or sentiment from the Euro side of things. And everything else is pretty quiet. All right, let's get to the fun stuff. Edge Finder. Let's see what has changed over the weekend. Top down, we'll go over every asset class. Let's see some straight setups that we can find for this week. I do have one position, which is gold to the upside, which is doing well as the market opened. However, again, it's all very contingent on this chart here. Okay, so although it is doing okay right now, if you were to see oil get back up to this trend line here and break above it and hold, inflation fears come back and gold likely falls. So this is it right now. But let's go ahead and see what else we can find besides gold. So let's go to, we're going to take off the neutrals here just so we can see everything. You have, okay, the yen basket is weak. So pound yen bullish, CAD yen, Kiwi yen, Swiss yen very bullish, Kiwi dollars very bullish, pound dollars very bullish. Okay, Aussie dollars very bullish. What else is bullish? Gold, Euro, Kiwi's bearish. That's interesting. Okay, let's look at the, you know what? I do like the pound basket. So let's look at pound dollar and then pound yen. So pound dollar, what is it doing? Are we finding some support here? You know, we are seeing, let me just say this out loud. We are seeing oil prices lower, yields lower. I'm not saying that the war is going to get better because I honestly do not know. Right? I've definitely been wrong in this many times. If you guys have been watching the stream, you guys know that sometimes I get a little bit optimistic, and I am kind of expecting, you know, some improvements in the Middle East war, maybe a ceasefire talk or whatever, and I am dead wrong. Okay, so this time around, you are seeing oil prices lower. I'm in the same camp where, you know, hopefully there is some kind of a resolution on the horizon. And if you see oil prices lower, well, that will translate into yields lower and a softer dollar. And if I'm seeing a softer dollar, I probably want to go against that and probably trade pound dollar to the upside, Aussie dollar to the upside, maybe Kiwi dollar to the upside. So I'm looking at pound dollar here with a bullish bias, but it's not a super strong bias that I'm going to hold on with my dear life, right? If you see escalations back again, then likely than not, this chart continues lower. But from a trend perspective, if you put a fib from here to here, and you have the 61.8 lined up right there, support right there, you have an idea or a possibility of continued dollar softness if this halt and strikes does hold and you see more talks between US and Iran, then perhaps this could be a good opportunity to the upside. So I like actually pound dollar long, which is crazy. Not crazy, but if you guys know, I remember on Friday I was like, yeah, I'm probably not going to long this thing anymore just because of its, you know, quick fast drop lower. But we are seeing it hold at the 61.8, and so that's something that I'm going to have on my radar for sure. Pound yen too. So if I like the pound basket, I want to see pound strength across the board. Pound yen, how does that look like? Okay, let's see. Oops, wrong one. Measuring the move out here from here to here. 30.2 will be lined up somewhere within here, or actually, no, this is the better zone. It's a pretty big zone nonetheless. So if I were to get a pullback into here, I'd love to see an opportunity to the long side. I would like to also wait for BOJ this week. So depending on that, I'll take this to the long side. I want to participate in the pound, honestly. If we do see that dollar softness continue on, then I want to be long the pound. Also like Aussie too. In fact, Aussie dollar, same situation. If you continue to see some dollar softness via lower oil prices and lower yields, then I like Aussie dollar to the upside. If you get some kind of a retest anywhere within here, I'm really not going to be picky. Again, I'm swing trading here, so I don't have to be too precise with my entries. I don't have to like wait for a fair value gap or for a certain thing to get filled or anything like that. I just want to be in a general area and then catch the swing trade to the upside. And so anything within here, I'm going to mark this orange for visual purposes. Oops. And then I'm going to do this. So anything within here, right? I am looking to be a buyer of Aussie dollar if you continue to see some dollar softness. And right now we are in line with the edge finder. So as long as that stays put, for example, Aussie US dollar, very bullish reading, pound dollar, very bullish reading, Kiwi dollar, very bullish reading. As long as all that stays in put, I am looking to go ahead and be a buyer of this market. So I like that one. Let's look at the Aussie basket too. I have marked up. So Aussie CAD, not really getting the pullback that I need right now. So I might miss that one. Aussie Kiwi, similar situation, moving up higher. And then Aussie Swiss franc has a long ways to go. So I probably won't get on the Aussie basket. Probably the one that has the most relative discount would be Aussie US dollar. So I'm going to keep that one in mind. I'm going to put an alert just somewhere random right here. And then we'll see if we get the pullback. Kiwi dollar, let's see what Kiwi dollar is doing. I probably wouldn't be a buyer of Kiwi dollar just because we're underneath that 200-day. This seems to be acting as strong resistance. Unless you see something different where you see a break above it, retest and hold, and continuation higher. I think between the Aussie and the Kiwi, I would prefer the Aussie. So I'm going to scratch Kiwi. So for right now, guys, I have Aussie Kiwi or Aussie dollar to the upside and pound dollar to the upside potentially. So that's kind of what I'm looking for there. Let's see. Alan, hot take, but whatever happens if war ends and inflation cools, but job market becomes very weak. Last NFP was well below expectations, so maybe the trend could continue in July's print. Yeah, so if you were to have continued weakness in the job market, then perhaps that could promote the idea of more, not rate cuts, but just rate holds. So going from 2 rate hikes to rate holds, that would be a dovish move in itself. Yeah, that could definitely be the case. We definitely have to be mindful of that as well, right? Because the Fed has a dual mandate, which is maximum employment and stable prices. And so what we saw in the last half of 2025 was, the Fed juggling those two, right? And so if you were to see continued labor weakness, then maybe they do have to go ahead and flip from addressing inflation to addressing the labor market. And if you continue to see, and this is why I say this, if you continue to see these lower oil prices, I know right now we had a recent bid up there in the last week. However, if you were to see oil prices back to like over here, that could be a positive sign. And then, inflation can start to gradually cool. If we look at the inflation, let's go to the edge finder and we go to economic data and we go to inflation and CPI. If you look, the last print here was lower, right? 3.5% versus expected 3.8%. And that was because we saw lower oil prices in June. And so if you continue to see those lower oil prices, that will translate into lower inflation prints. So CPI doing well. We also look at PPI as well, which was lower as well. So let's look at that. Came in at 5.5% and the forecast was at 6.2. Okay, so it's clear here that lower oil prices does translate into cooler inflation prints. So yeah, that could definitely be the case. So if the labor market weakens and you still see oil prices lower, that could be dovish for the Fed. Let's see here. What's going on in the chat? How strong is Kiwi dollar? I am bullish on Euro Kiwi short term. You're bullish on Euro Kiwi. So let's go ahead and look at the edge finder first for top setups page. Euro Kiwi is bearish. So you're going against the grain there. But let's look at the chart. Let's look at the chart on Euro Kiwi. You are bullish. Assuming that you maybe bought somewhere right here, I think you're in a good spot. Okay. Risk defined, right? You still have a chance for this thing to continue higher. However, if you're like way over here somewhere, I don't know. But if you're like something like this, this is a good risk defined opportunity. You can trade it to the 200-day moving average. Be mindful that you are trading against the edge finder score. But, this is a mean reverting currency. This thing's chopping around since February of 2026. So for the whole year, pretty much it's been chopping back and forth. So I wouldn't stress out too much, man. You know, Alan, what's good? Tony, what's good? Waiting patiently for AD direction this week. That seems like it's going to be a fun one, man. We have a lot of things on the calendar this week. Let's see here. Any chart markups that you guys want me to go over, again, feel free to drop those into the chat, and I'll do my very best to go ahead and address those for you. Let's see. Gold. We love gold in here. Let's do this. I need to change this, bring it down a little bit. Okay. Gold. My perspective here, because I was getting some comments saying the breakout was a long time ago or whatever, but this is my trend line. So the breakout just happened for me. Okay. Bearish trend line here on gold since the war started all the way until now. You had your first ever, look at this. You didn't have a break and retest this whole entire time. You see this chart? Not one time until July 21st of 2026. And so we had the breakout retest of this level in gold. We actually held up firmly and we are trending higher. Now, we are seeing a little bit of soft, like the most minuscule thing ever in gold right now, but you're still up there. So we're in the positive here. And I'm hoping that we see a continuation higher, especially if you see lower oil prices and lower yields. I think that will continue to help support gold to the upside. If you see something change, then of course, this is a fake out and this continues lower. But for now, the actual fundamentals, technicals is all in line, honestly. So you have lower oil prices today, lower yields. You have the edge finder bullish as well. You had weakening jobs data in the US for the NFP. You had cooler prints for inflation in the US. Those are all, bullish catalysts for gold. So I'm hoping that stays intact. And I like this level particularly because if you just zoom out here, if we go like on a weekly time frame and you assume that this is a strong level of support and that it holds, and you assume that this is the bottom in the near term, like in the next 2-3 months or whatever, you're buying at a discount. So I like that idea, and just targeting that 200-day moving average and then see what happens from there. Trail below some structure. And that's how I, intend to approach gold. Pound Kiwi. Yeah, let's look at Pound Kiwi. Pound Kiwi, finding some support there. The tricky part about Pound Kiwi is that the pound's getting a strong reading and also is the Kiwi dollar. So that's tricky because you're buying two strong currencies. And so the movements won't be as clean. Let's see. Is Pound Kiwi even up here? It's not. It's probably getting a neutral reading. So I would probably scratch that. Let's see. Yeah, I'm not going to do it just because, again, two strong currencies against each other doesn't create the best opportunity, I would say. Aussie Kiwi. Yeah, this is the one I just touched on too. I like this one to the upside. However, I would need a pullback. So right now, price is just moving with us or moving in the trend to the upside. So I would wait for a pullback until this level of support here. That's what I would look for. But I'm not going to rush into it. That's not the most enticing opportunity. Pound dollar. Pound dollar to the upside I like a lot. So we are at the 61.8 from a technical perspective. This is basically, in my point of view, the last line of defense is the 61.8% retracement level. So if the 61.8 fails to hold, then likely you see pound reach to this other level of support here at 1.32. And at that point, you have better value. You have more of a discount, but then you have to ask yourself, is this level, is it wise or is it expected for there to be some kind of a bounce in the pound dollar versus some supporting fundamentals for the UK or some weakening fundamentals for the US, right? You have to ask that question once you get to this 1.32. But for now, 61.8 is that last line of defense, and pound, I will watch it closely. If you fail again, you likely just trade to the next zone to the downside, which is that 1.32. USD JPY, yeah, USD JPY is still running up there, running up that road, running up that hill. I would wait for BOJ. In fact, when is BOJ? Is it on Tuesday? Thursday? Thursday. Policy rate and monetary policy statement and BOJ outlook report. So that one I would watch for sure. There is a almost certainty that they're not going to hike in this next meeting. However, the forward guidance is going to be very important, especially how restrictive they intend to be. That would be very, very important for this chart here. So I would wait for USD JPY. Any opportunities? For one, I don't want to short this, but any opportunities to the long side after the report. Tony says we got them strikes on hold. He doesn't know what that means. You know, at this point, I ask myself the question, like, what would the end to the war even look like? Like, what would I need to see for me to actually believe that it's over? What's going on with the yen? Here's what's going on with the yen. BOJ is looking to hike their rates, but they're not eager to do so. And that's what I'm getting from it. They're not super eager to do so. Versus the Fed, recently, as of last week, we went from one rate hike. I'll take that back. We went from rate holds to one rate hike to two rate hikes. So this is what's going on with monetary policy, okay? I'm going to draw this here. This is the BOJ. BOJ's rates. Then they want to increase very slowly, okay? That's what they want to do. And then this is the Fed. So it goes from being super narrow right here to now the Fed outpacing them in rate hikes. And so the gap between the two widens. That widening gap helps pull USD JPY higher. That's essentially what happens. If you were to get something like where Bank of Japan is as aggressive as the US, then that could be okay for the trend, because then at that point, you would see the rate differential between the two kind of just stay neutral or steady, and that could help control USD JPY. But as long as the US, the Fed, outpaces Bank of Japan in their need to rate hike, and that spread widens in interest rates, that's going to continue moving USD JPY higher. Well, are you a Fed? I am not. I am not a Federal Reserve member. But yeah, that's basically it. That's what's driving this whole USD JPY move higher for a long time. It's a very popular trade, the carry trade. And so, yep, we'll see. Do you think gold base is 4,000 for the coming months to a year? I personally think so. I think that the worst has been priced in already. You know what I mean? So unless you get something drastically different, then that could cause some repricing in gold. But I think that this overall level here, let me go to this chart because it's cleaner. I think this overall level, so what is this? From 39 to, 3,900 to 4,000-ish. This whole entire level is pretty solid support for now, okay? I think that's a pretty good base. As long as things stay where they are or improve, I think the case is to the upside for gold, or at least sideways, in my opinion. So that's kind of my thought process there. And then my stop loss is obviously below the level. So if you were to break it and continue lower, then I want to be out of that trade. But I think it's pretty solid. Unless you get something crazy, I really don't see. Another thing that could cause it is if you were to see this chart right here, US 10, to continue trading higher, and you get into like the 4.8s, 5 or 4.9s, that would be problematic. That would probably be some very aggressive rate hikes being priced in, and so that would be bad for gold. Alan, will you hold gold till the news day? Of course, of course, I always hold over news. News does not scare me. The only time news would scare me is if I have a gigantic trade position, and I don't do that. So news is just short-term volatility. If you can survive the short-term volatility, then you should have no problem. And I'm also a big believer in having large stop losses. Like, you will never see a trade, especially in gold, look like this. And this is so crazy because I see this all the time. And it makes me, it annoys me a little bit, because let's do this. Let's go to this is legit what irks me. Okay. Someone will look at this gold chart and be like, oh, look, support, right? This is just me hypothetically. And then this is the trade. I'm like, bro, how do you do that? It's almost a certainty that you're gonna get stopped out. So for me, I really like large stop losses. Like, give the trade room to breathe, let it do its thing. Like, just pull up an ATR chart and then double that number, and you should be fine. Yeah, you need to let the price breathe. Especially too if you're trading the spot market. Like, this is XAU USD on Oanda. So if you're like trading CFDs or whatever, this is a decentralized kind of exchange kind of way that you're trading. And so to say that this chart looks exactly the same across other brokers is wrong. Like, you need to really be mindful and know that, unless you're trading like the futures market where it's all centralized and the price is what everyone else sees. But like, if you're being so precise down to the tick and your stop loss is so short, that's a problem waiting to happen, man. That's death by 1,000 cuts. Gold is crashing hard though. You see, that's the thing. Like, gold is green on the day. How's it crashing hard? Look at this daily candle. It's nothing. If you go to a 1 minute, then yeah, it seems like the world's ending. Right? Like, this looks horrendous on this is a 1 minute chart that I'm looking at, but gold is not crashing. It's really not doing anything at all. This is a chart you should look at, the daily, and it's doing nothing today. It's literally almost, it was up 1.2% on the day, so it's not crashing. Yeah, it's crashing hard on the 5 minutes. Yeah, I mean, this looks like I wouldn't even call it a crashing chart. Like, this is me zoomed in on TradingView. If I just zoom out like a little bit, like, this is the price action. This is it. This is not a crashing chart. You know what I mean? But that's just my thoughts and opinion. Let's see. Gold says Max does that. Well, Max, you're the exception, Max. There's something with Max that he has some insider information. Do you see the score? Do you see a score of 4 to be enough to be biased? Usually Edgefinder had scores of 5. Yeah, I think so. I honestly think so. There was a lot of scores that were like 4, like in neutral camp. So I think it's a pretty solid score. I mean, it's working out here on gold. Edgefinder is really, really good on gold. So usually when it gets a bullish reading, it's pretty correct on that. Not to say that it's going to be perfect every single time, because I don't want to make that claim, but the Edgefinder has been very, very, very well at moving with gold. For example, right here, when the war started, it didn't print you a bullish reading at all. Now, it didn't say it was a bearish reading, but it was neutral. And so that neutral reading was enough to say, hey, don't buy gold, stay back, let it do its thing. So yeah, the Edgefinder, I have a lot of confidence in it when it comes to gold. When is Nick joining? If you go to, I'm going to drop the link in the chat here. Go ahead and look at this right here, my friend. A1trading.com/livestream schedule. Go ahead and look at that, and you will see when Nick comes on. He comes at 8 a.m. Central, which is my time. But the beauty is, if you were to go onto this website, it is in your own time zone. So you don't even have to guess anymore. You can just see who's on right now. Marco's going to come up after me, and then Nick. So, yep. Bottom of gold, probably around 3,000. Hey, man, for a long term, that would definitely be pretty solid. You actually want gold to retrace to fill that gap for you to enter. Well, let's see. Where's the gap? The weekend gap that you're referring to? That's probably going to happen, honestly. It's probably the likelihood. Getting close to it. Maybe you fill the gap and then continue higher. Possibly. Is there any news from FOMC? Not today, but it is going to come out. FOMC is on Wednesday. We have the rate decision. We have forward guidance, the statement, all that good stuff. What about other assets? Is 4 points enough for them to be biased? I think so. Alan, pound CAD longs, is it risky as oil is uncertain? You know what? With CAD, the correlation with the Canadian dollar and oil hasn't been quite strong. I'll be honest with you. It really hasn't. So I really wouldn't have that be a huge decision maker for me when it comes to the CAD strength or weakness, depending on oil prices. It really hasn't done much this time around. So let's see who comes off after me. Marco. Pound US dollar is sweeping liquidity at the 1.392, 1.329 before moving up. Maybe it may. I don't know. I can't see the liquidity on this chart though. I don't know. Is it this maybe? I don't know that approach. Is it possible for gold gonna close the CME gap first? Again, maybe. Who knows? Let's see. GC on futures. I don't have the data subscription, so it's going to be a delayed chart. But it seems like it's on that trajectory. Win opportunities. I still have nightmares about January's gold price action. Yeah, that was crazy. That was crazy. Silver. I mean, silver was worse, man. If you're going to have nightmares about any of them, it's going to be silver. That was crazy. This is let's see. This 1 day move was what? 27% in 1 day. I remember that day. I was very happy that I wasn't in anything that day. Max, I'll take a look at it after when I get off the stream. See what you sent me. Okay, no worries, Nick. You guys might get Nick early here today. Hello from X. Hey, Alice. We've had a lot of viewers actually from X, which is really, really cool to see. Like more diversity. I also saw some Facebook in here as well, which is really cool. So definitely tune in for future stream, guys. And we extended the viewing options by a little bit in the morning. So we have some coverage in the UK session. What are your average gains percentages per month? Very little. Very, very little. It is nothing like 20% or anything. I'll be very happy with like 2%, honestly, if I'm being honest. There's some outliers every once in a while. Like if you were to catch something big, like, your 1 or 2 a year type situations. But I have a very, it's 2% is really good for me. I think if yours, I see people say like you can make 2 or 3% a day. And I think like maybe you can have a hot month. I'm not saying that's impossible, but you know, doing that, 2, 3% a day consistently, month over month, I think is not the right approach. I think you should go for less percentage gain. I think that would do you a favor, and just strive for bigger capital size. That's just my thoughts. I know people are different. I know people in the day trading world prefer like these 2 to 3% days too low. Oh, sluggy. Maybe 5% a day, huh? 10% a day. Rev says at least 50. Oh my goodness. Well, average 2% per month means 24% per year, so it's really great. Yeah. Yeah, don't listen to Rev and Sluggy. Let's get these guys out of there. Don't listen to that. Again, 2 to 3% a month is good, I would say. Your gold position might give you a good percentage. Yeah, we'll see. We'll see how far it really runs up. If it's a runner and it continues higher and higher and higher, then perhaps there's opportunity to build on that winning position, and then from there, that could be one of those things that comes on. That 1 or 2 trades a year that really makes up a majority of P&L. So we'll see what happens. Exactly, Mr. Z. You're correct. So 2 to 3% on a month on a 10K account is not enough. And so thankfully in the world of today, where you have prop firms and stuff like that, you can leverage that and get higher capital basis. So yeah, and then I'm going to give you this nugget here real quick. We're going to go to notes. I'm going to pull this up for you. If you believe you are ready for prop firms, of course, do your own due diligence. Make sure that the prop firm trades within or your rules align with a prop firm. But just join the Discord. We do giveaways, we do discount codes, all that good stuff, so you can take advantage of that. But we have Mr. Nick here in the chat or in the background, so I'm going to move this over to him. So thank you guys, and give me 1 second. Let me put the ad form right now.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show. All right, everybody, welcome back. Hope you're doing well. Thanks to Alan for his great segment. And I wanted to piggyback off what he was saying about percentage gains and returns and all this. let me tell you something. There was a moment in my trading career. This was, I don't even know. I was, early college days trying to figure out trading, probably 8 years ago or something like that. And I just absolutely, to this day, I love trading. I love financial markets. I love studying, finance and the stock market and companies and economies, and love it. Just very interesting, very intriguing to me. And I want to just say that I have never met someone who actually makes money in markets, who does well long term on this stuff, that does not have that level of passion for markets, like a deep, sincere interest in just markets and how they function and what they're doing. So here's the thing. Like 8 years ago, I was on the cusp of like, my trading was going back and forth. It was sometimes good, sometimes bad, but my account would swing dramatically. Like I would have a month, and maybe this is some of you guys right now, like maybe I am speaking to your soul right now, but I would have months where I'd be up like 17%, or I'd have months where I was down 20%, or I would have a month where I'm up, 16%. And I would go back and forth, thinking that during these times, I was like, I think I'm figuring it out. I think I know what I need to do now. Like, I just need to do more of what I was just doing. Like this past month has been really good. Let me just keep trading that way, right? I would do everything the exact same way. Next month, down 20%. Does anybody feel like that's them right now? Like, please give me a me in the chat, because I feel like I'm speaking into a time portal to my old self. That used to be me. Like, the drawdowns would be intense, psychologically destructive, and then I'd have a good month. Everything was great. Nick, I think you're doing this, man. I think you're a good trader now. Let me speak to you right now on this Monday. If that is you, right? If that is you, let me speak directly through this camera to you. That had to stop for me to keep trading, because this was, as Alan puts it here, a sleep score of 0. And what I mean by that is that the psychological whiplash of that, you can't, like, do you actually realistically think that your net worth, if a bunch of it is tied up in your trading, can swing by 15% to 20% back and forth month by month on not granted, like you might have 40% down months or plus 40%. Like, that's not sustainable long term. You can't do that forever, right? In fact, I would argue you shouldn't do it at all ever, not even in the early days of your trading. Because in the early days, everyone's like, oh, I'll just grow the account, I'll get it big enough, and then I'll slow down. Well, I did that, but let me tell you what happened actually. I lost a bunch of money, and it hurt to the point that I was like, I can't do the insanity. Risking too big does not, it never ends well. Like, it ends terribly in the long run. I'm telling you that because there was a moment that clicked in my brain, and then I'm going to pass over to Marco for a few minutes here. He is here in the background, so I'm going to give him the show. Check this out. What changed everything for me, though, I loved markets so much. I still do. Like, I'm so fascinated by studying the financial markets. And I said, I don't care if I make less money. I just want to be a trader. Like, I actually just want to do this. How can I do this? How can I actually do this long term? And so I said, okay, I don't need to make 20% in a month. I don't need to make 10%, 15%. That doesn't need to be my goal, because I'm fairly confident that I can generate 1 to 2% per month. And so when I changed that mindset, oh my gosh, guys, I'm telling you, everyone here, if you are, and this is a very honest question, you have to think to yourself, do you actually love markets? Do you actually love trading, or do you just want to make money? Because if you just want to make money, don't trade. But if you actually really like markets and you say, I want to be here long term, I don't care if I'm making a lot of money right now, I just really want to be a trader. If that reset for me changed everything, because they said, I want to be a trader. I don't care if I make a lot of money right now. I just want to trade the markets. I want to be involved in this. I love doing this. I don't want this thing to be destroying me financially. So I embraced going for like 1 or 2% per month on average. And again, the people who don't like that idea, they have low capital or they don't actually love trading. It's always people like that. People who are like 2% per month. That's just a waste of my time. Well, then you don't love markets. So do something else. Your time is better spent somewhere else. But if you're here for the next 20 years, 2% per month can scale to multi-millionaire status. If you are adding to your account, if you are building it, if you love markets, you should do that, in my opinion. But if you don't love markets and you're here to make money, like if you're, I'm not really interested in trading or financial markets. I don't care to study the stock market or study what's going on with the economy. Don't trade. Do not touch trading. If you love this stuff, then the idea of scaling down your risk and doing something sustainable and building up your account slowly over time shouldn't be a waste of time. It should be the long game. I'm going to play the long game. I'm going to do this. And guess what? That changed everything for me. It was a game changer. Absolutely changed everything for me. Because you know what? I can generate 2% per month. I can generate 1%, 1.5% per month. I can do it sustainably, and I can keep showing up every single day here. The other, just a side nuance thing, I'm sorry, Mark, I'm running into your time. The other nuance thing is, as a content creator, for my content creation friends, risk management is so critical because we also have to get on camera and talk about this stuff every day. Listeners, imagine if during your worst drawdowns, you still had to get on camera and talk about your ideas that were going awfully wrong. That's hard for human beings to do. I don't care how long I've been doing this. When I'm going through a bad drawdown, it feels terrible. Like you're sitting there like, damn, you know, I'm talking about this idea that's just gone wrong. It's like the 15th one in a row that's not gone right. So how do you survive that? How do you sustain that? It's the same way that somebody who's just trading without a content creation platform does it. Scale that risk down. Get it to a point where it's tolerable. You can actually stomach those painful drawdowns. These are the sorts of things that when they clicked, they changed everything for my trading. Content creation actually simultaneously helped me dramatically improve my trading more over time by employing things that were like, I have to get on camera and talk about this. I have to like set up my trading to be bulletproof, right? Same thing in even if the camera was off. It's the same concept. But anyways, with that said, I'm going to swap out myself for Marco. He's going to go for a few minutes, and then I will be back with you guys shortly here in about 15. So Marco, I'm going to just swap you in here. You are.
Okay. Hello, everyone. So I screwed up and came in 10 minutes too late. I do apologize. But anyway, so Nick, if you need me to go on for a bit longer, if you want to take a bit of a bigger break, just let me know in the chat. So second segment, oil is retracing to the upside a bit. So if you're wondering what should you look at as the best proxy for the Middle East conflict, it is Brent oil. Okay, so it's not really US oil, but actually it is Brent. So US oil is down minus 7.3% on the day. Okay, but Brent is only down minus 0.5%. And I think this paints a bit of a more clear picture, right? So the biggest input in this is the Strait of Hormuz, which is closed. I don't think that they updated the port watch, so I managed to find the Strait of Hormuz report, which is on the portwatch.imf website. But the last print was to July 19th. So I'm not sure exactly when this will update. I'm hoping it updates soon, but yeah, we kind of had our print here. So the print was pre-war around, let's say, 70 to 80 ships per day. Then Hormuz closed, 0 ships. Okay. Then Hormuz open, maybe, I don't know, 30, 40 ships, and now it's closed again, so it's back near 0 to 3. Okay, it's back to near 0 to 3. I think that is all that I need to know, and I just need to see the latest week. I think it should update today or maybe tomorrow. That's the exact reason why Brent is going up. Elvis asks, why not WTI? So why not US oil? The reasoning is that Brent actually takes into account more of the let's say the world markets when it comes to energy. Okay, U.S. oil is focused, of course, on the U.S., but Brent, from my research, gives you a more direct, let's say, direct feedback as to what is going on in the Middle East. I think we can hit 100. I think that can very, very easily happen. And right now, whatever you are trading on this list, you're essentially trading oil. The biggest catalyst, the biggest market mover is oil. That's why you need to get a good read on it. Of course, it is also the Fed, so the central bank of the United States, but they are fully dependent on inflation. Inflation is highly influenced by the price of energy. So if we go to the Edge Finder, we go to data, inflation, CPI, we can see that it was steadily rising when the strait was closed. Then it briefly opened, so the print came in cooler than expected, but it's closed again. That's why I'm thinking this print is going to go above 4.2%, maybe even to 5%. I don't think the Fed will hike this week, so I do not think that the Fed will hike on this meeting that we're getting on Wednesday. But the meeting in September, I think there's a high chance. So if you go to the Fed watch tool, and we go to September, there's a 56.2% chance of one hike and a 23% chance of two hikes. Okay. Then what you can also do is you can go to Poly Market. You can go to Fed decision. Let's see, and you can find, so you have July 29th and you have September 16th and October 28th. So you can get also the probabilities here. You can get it from multiple different sources. Now, Polymarket, I did some research into it, and essentially, so what most people used to mainly rely on when it comes to probabilities about specific events is the Bloomberg terminal. The Bloomberg terminal expectations were made mostly by, let's say, experts and polling. What you can also now use with the birth of Kalshi and Polymarket and similar websites is you can use betting sites to get your probabilities. And these sites actually have much more accurate numbers than what the experts say or what the polling does, because here it's real money on the line. You know, all of the biases, all of the, let's say, the things that people don't want to maybe talk about, all of the experts that don't want to give a crazy prediction, that want to keep their prediction kind of near the let's say the median number. All of that is gone. So you essentially have people placing bets with real money on the line on specific outcomes. So what do we have for the Fed decision in July? I know the Polymarket was extremely accurate for the last US election and for, I think, a couple of elections before that even. So this is the new thing to use as a trader. You don't have to trade on it, but you can use it to trade traditional finance, right? Personally, I wouldn't put my money on this platform because I read about some cases where people did win, but they did not get paid out. So it's pretty, let's say, well, it's still kind of pretty fresh and new. But you can definitely use this to create your bias and then trade the US dollar, as I'm doing right now, or trade stocks, or trade gold, or whatever you want to do. So right now I'm in a long position on USD CAD. I'm essentially building my positions around the US dollar. But anyway, if we go back for September 16th, there is a 44% chance of a no change and a 51% chance of a 25 basis points increase. I think this is a bit low, actually. So I think this number, as we approach September, could go up to maybe 70, 80%, especially so if the strait remains closed. So that's my edge here. That's my edge. I'm basically betting that the current market pricing is not correct for future expectations. I'm thinking this percentage goes up. I'm thinking this one goes down. I did talk about this position briefly in my first segment, and I did mention Swiss yen, where I'm looking to sell the Swiss yen and basically bet on yen weakness. Okay, bet on yen strength. If we break the 200 level, and that is definitely a second trade I'm looking to do. Now, as far as the yen goes, I actually think you get a lot of alpha without the beta. So alpha is your edge, and the beta is the correlation. Here, the correlation being the Middle East. As I mentioned, everything on this list is correlated with the Middle East, with the Strait, with the price of oil. Okay, except the yen, because the yen has been super weak lately. The Japanese government definitely wants to see a stronger yen. They have a couple of tools that they can use. First one being a outright intervention. Second one being rate hikes, which we are getting. So we do have the Bank of Japan policy rate this week, and we could get a surprise rate hike. It could happen. It has happened in the past. If you study this, I think we had one example in 2024. So if we go to USD JPY and we go to 2024, I believe in one of these instances they did they did a surprise hike here. I think it was here in July 2024. I can't find it now because of all of the bubbles, but let's try to zoom in a little bit. Here maybe? Yeah. Okay, here it is. So essentially they hiked here as a surprise hike. So it happened on the 31st of July, 6 in the morning my time. The previous number was 0.1. The forecast was for the number to stay the same, and they printed 0.25. And that was a surprise rate hike, which of course made USD JPY massively drop. Same thing can happen again. It is one of the tools that they can use. And also the third one, so we have intervention, we have a surprise rate hike, and we have the pension fund. Okay, now the Japanese pension funds, they hold a bunch of foreign assets. Recently, if you have been following the situation, the Japanese government actually mentioned, so they mentioned to the pension funds, look, you guys need to start selling foreign assets and buying domestic. Basically, sell US bonds as an example, buy Japanese bonds. That actually strengthens the yen as a currency, and that's another tool that they can use in their toolbox. Because of all of this, and because the Bank of Japan or the Japanese government is staying pretty vocal about the yen being too weak, I want to bet on a stronger yen. So selling Swiss yen seems like a good option, in my opinion. It's a bit of a long-term hold, maybe the next 1, 2, 3 months. That's why selling USD JPY is a bad idea, because you get eaten up by the negative swaps. But Swiss yen, depending on your broker, could even be positive swaps. I also want to quickly mention, so if you're looking to get funded, okay, we have Ola Prime, which has a 20% discount with the code A1 Live. Okay, so Ola Prime, sponsor of the live stream. Basically, if you look at their Trustpilot, that's the first thing you need to do. So if you're looking at a new prop firm, just jump on the Trustpilot first. Let me just give you a couple of pointers. Here, the score 4.5 out of 5. For this niche, that's pretty good. Anything above a 4 is pretty good. 2.9K reviews, that's fine. Then you look at the ratios. So you go to see all reviews. You look at the 5-star to 1-star ratio. If the 1-star is below 10%, I would say it's fine. Now you need to know this industry with prop firms, they make money on challenge fees. So of course there's going to be a lot of people that don't like that sort of a business model. But again, it's the niche. So you look at the ratios and you compare. This minus the below 10% is fine. The 5-star above 80%, that's great as well. Then you read through the reviews. Okay, you need to spend some time on this. Then you join some Discord, see what's up. in there. I know with Tola Prime, we have a couple of members in the A1 Discord who actually got steady payouts and who have had a pretty good experience. So that's why I do recommend them. And with the code A1 Live, you can get 20% off. Okay. So I think I have reached the end of my segment. Nick, you're going to take over here?
Yes, I got it from here.
Okay,
Marco,
okay.
just wanted to jump in and thank you for joining today. And I don't know if you caught that little blip I was ranting about with position sizing and stuff, but I want to get your thoughts on that just before we continued. That concept of, you know, your risk management being dialed in so tight, because not just because, you know, you want longevity in your trading, but also from your like mental health, right? Like if you have big positions, I don't know if you've ever, I'm sure you have, like everyone has, like had times where your position sizing was just inappropriate, was way too big. And you have a situation where it's like the mental swings of your capital moving like that are just so overwhelming. But then even further, the unique lens of like our side of things being content creators, I asked like the audience to kind of like picture, imagine if not only do you have those swings, but you have to get on a camera and talk about those swings. Like it makes it even more important as a content creator, as a trader. Like risk management is not as, it's equally a mental kind of health sort of thing or defense sort of thing as it is a mechanical, you know, component to longevity in your trading. Would you agree?
Mm-hmm. Yeah, absolutely. And I would actually say a lot of your edge comes down to your risk management, or let's say the amount of time it will take you to really grow your account. It's going to heavily depend on your risk management. Like I've read the latest Market Wizards, and the main thing that separates the wizards from the rest is they go all, I mean, they don't go all in, but they can slap on a bunch of size and still sleep at night. They do like 3 to 5% risk per position sometimes. Personally, I at this moment can do it. My biggest issue has been small positions or positions that are too small to my conviction size. So if you want to be a market wizard, you need to go heavy. But if you want to stay here long term, and if you don't feel comfortable going heavy, you need to control the risk as much as you can.
Marco, I also want to ask you about your stock market stuff, because I've seen some of your you've been watching. I've noticed you've been keeping a close eye on the index level, looking for momentum, for breakouts, etc. I also like to trade. I mean, it's not as like prominent of what I talk about on my channel, but I really like to trade sectors. So that's kind of my spot that I like to trade. So I like to trade, you know, like the financial sector. I find there's pros and cons with individual stocks. I like to like long-term play individual stocks, but for trading, like if I feel like, for example, I really like software stocks. If software stocks as a collective group start making a move, I may like take a trade on the collective group. My challenge with that, the pro and the con, because I've heard you say like the alpha potential of like picking a good stock, there's nothing like second to none other than maybe crypto. Like you can catch some incredible moves. If you catch, you know, Google on a crazy run to the upside, like this is going to be way better returns. Like that's a 40-45% move on Google, as opposed to if you're trading SPY or, you know, S&P 500. But I'm just curious, how's that going? Kind of what's your approach there?
So right now I'm in, let's say I'm pausing basically, because the main rule behind it is that the SPY, so if I want to buy breakouts on any individual US stock, the SPY needs to be on a clear uptrend, and it needs to be above the 50, the 20, and the 10 EMA. Right now, the SPY is pretty flat, and it's in between those EMAs. So the main prerequisite is not there. Essentially, the name of the game is, as you mentioned, not to buy the SPY during an uptrend, but to bet on individual stocks to really maximize the return, because Google moves 40%, SPY moves 10%. So you essentially grab a lot more upside if you can catch those huge movers, but the SPY does need to be on a clear uptrend.
Yeah, it's really interesting because I kind of do something similar, but on market pullbacks. So like, for example, if the S&P 500 gets to a level where I'm interested in, you know, I think like stocks are a decent buy, for example, what I'll do is I will usually trade the index level. Like if there's like a, higher low, higher high, I'm trading that side of things. But if I think that the stock market itself is looking attractive, I'll go buy individual names that I like from more of like a less of a momentum perspective, but more of like a, quality and momentum. Like, for example, I have my eye on Google. If the market were to drop, I'd buy some shares of Google, or I'd buy, shares of Microsoft, or something that I feel is like a good value. So just an interesting concept. But yes, I love that idea of like taking your view of the index, and then employing, like, if there's individual stocks, because truly, like, for example, CrowdStrike, this thing has been a monster mover. Like if you caught some of these breakouts, let's say you have a thesis that the stock market's going to break through highs or something like that, and the stock market does go through highs, but instead of taking the S&P 500 long, you trade CrowdStrike, which gives you a massive 50% run up in the stock very shortly. So just new ways to kind of add in if you're an index trader. Now, of course, higher risk, higher reward, because when you go individual stocks, you also play the downside risk of, when you are trading an individual stock, like for example, Nike, for a very long time would have been a one that you could have been like, yeah, Nike is going to have some sort of extra, boom to it if the stock market goes up. That can change, and then you can suddenly be caught in a situation where the index may continue to push new all-time highs, but here's a stock that is so far away and just keeps crashing. So all sorts of pros and cons to mix in there.
Yeah, and I noticed everyone can make money during the bull run. It's really not hard. You just buy and hold. But what makes the difference between a profitable trader and just a one-time, let's say, winner, the profitable traders know when to stay out. So essentially, they make money during the uptrend, and then they just are patient when it's flat or in a downtrend. But the novice will keep on trading, keep on buying breakouts, because breakouts are happening every single day, every single week. And if you keep executing while the S&P is flat or down, you lose all of the profits and you'll go into drawdown. So that's the main difference.
Exactly. Yeah, very cool. Well, Marco, thanks for hanging on with me here a little bit longer. Excellent stuff as always. And I guess we'll see you on the next segment.
Sure. Yep. See you tomorrow. Goodbye.
Okay. See ya. Okay, guys, we've got something fun here happening. Let me just make sure we are all aligned here. We are going to do, James on the back end, we got the Prop Shop Trader segment here coming up. And you guys are in for a special treat today. I've got the lucky opportunity to spend some time taking a look at some charts with Mr. Sean, for the CEO of Tick Blaze. He's also involved in Prop Shop Trader. He's the co-founder, I believe. So very cool stuff coming your way. We're going to play a quick break here to welcome our sponsor and our next segment, our next guest here, Mr. Sean. Stay tuned. We'll be right back after this. Don't go anywhere, traders. We'll be right back to the show. But real quick, I wanted to tell you about today's live stream sponsor, Prop Shop Trader. If you're a futures or equities trader, let's talk a little bit about what Prop Shop Trader has to offer. So first and foremost, if you're a stock trader, there's not a lot of firms out there offering stocks. So this creates a unique opportunity for stock traders to get in on the prop firm action. Prop Shop Trader offers a variety of various different account types for both swing and day traders looking to trade futures, whether that be gold or Nasdaq or ES or YM, whatever you trade there, or on the equities side. They also have a very scalable environment where you can actually trade up to 20 accounts within the same prop firm. A lot of traders nowadays are trading with lots of different prop firms, but Prop Shop Trader wants to make it more accessible and stackable to build your relationship with a single prop. With competitive pricing and transparent rules, Prop Shop Trader stands out as a solid option to consider for those of you who are trading futures or equities. If you're interested in exploring Prop Shop Trader for yourself to see if the accounts are a good fit for your trading style, then make sure to use our promo code A1 Trading to get a really substantial discount at checkout. Our code will get you the best available prices right now. As always, I want to disclaim that prop firms are a great way to scale up your trading capital if you have the skills. So I am personally a fan of waiting until you have have consistency in your trading before attempting to take any sort of prop firm challenge. But if after reviewing Prop Shop Trader, you like what you see, it fits your style, and you've done your due diligence on the prop firm, you want to push forward with it, then make sure to get that extra discount with our promo code. You can also find the link for this down below in the description. The live stream chat should also be seeing that pop up, and we have a QR code on the screen that you can scan to check them out now. Thank you again to Prop Shop Trader for sponsoring today's live stream. Now back to the show. All right, and we are back with Sean. Hey, Sean, how are you, man?
Good, Nick. How are you, man? Can you hear me?
I'm good. Welcome to the stream. It's good to have you here. Guys, so as I did a little bit of introduction, Sean is the CEO of TickBlaze, which builds some pretty incredible software in the trading space. Also, is that right? The co-founder? Is that for?
I'm the CEO of TickBlaze. I'm the owner.
And then Prop Shop Trader co-founder.
Yeah, we launched Prop Shop Trader last May, I believe. Yeah, so it's been a little bit over a year and a bit. Yeah.
Awesome. Well, I'm excited you're here because we're going to be taking a look at some charts together. I'm sure you are as much of a chart junkie as myself. So, well, actually, maybe more. There's not many people, but with that, the amount of tools that you guys have, I'm challenged by your level of chart junkiness, which is awesome. Sean, what do you trade the most? I think last time I spoke to you, you trade a lot of Nasdaq. Is that right?
I do trade Nasdaq mainly just due to I came from an equities background, right? So I was an options trader before I ever traded futures. And, if you think about futures, everybody doesn't realize that they're actually tracking equities, right? So you need to understand the equity markets before you understand the futures markets. Not that you should have to trade stocks or use scanners or any of that stuff, but you should still have a grasp on it. The volume is in the Nasdaq. The S&Ps for the big boys, the Nasdaqs for the guys that want the moves and the runs. Truthfully, the Russell's a great market because there's no correlated risk, right? A lot of traders don't realize that the RTY is probably one of the only markets that trends more than the Nasdaq. There's no correlated risk to the S&P or the Nasdaq. There's no overlapping stocks in the Russell. So a lot of people say there's correlation between all these indices, but Russell's an independent market. A lot of traders should trade it independently. Take the Nasdaq, take the Russell. Those are the two best markets to trade.
I actually so agree with you on that. I love trading the Russell, and for the very reason you said, it's a different. You can look at it on any of the big mover days, and Russell. I mean, it may generally move in a similar direction, but to very varying degrees. Like you can have Nasdaq up, Russell down, and vice
100%.
versa. Like they can be
many days.
Yeah.
And it's because they track the small caps, right? Small caps have a mind of their own. They're going to do what they do when they do it. And the other, I don't like to trade correlated markets too much, right? Like if I'm going to pick one, I'm either going to pick the Nasdaq, the S&P, or the YM because there's such a huge overlap to all those stocks. And so Nasdaq's normally the one I pick because it moves faster, right? It's a faster moving market. You get a little bit, but it's a little bit more experience. You need to know what you're doing, right?
Yeah, for sure. So Sean, if you want, there's a share screen button right at the bottom there. If you want to throw any charts up in the meantime, in terms of just for listeners here, just a quick run through on while Sean's doing that. We've got S&P 500 here in the green today. Nasdaq's up 1.3%. Dow Jones actually taking the lead as well. Speaking of the Russell, up 1%. We've got the dollar index kind of flat on the day, was lower, has recouped some of its losses there. Gold is up on the day, but a little soft here in the last few hours. And maybe the big mover today is oil, which was down at 1.8% on the day. We're down about 7% now. I'm just looking at WTI there. Bitcoin's down a little bit. So you have some movements. Yields are lower today. Of course, that's off of the idea, the Middle East stuff kind of cooling off a little bit, which is, optimistic for markets. So Sean, I guess from a trading perspective, you are a little bit more on the intraday side of things, right?
Well, yes and no. It depends on my objectives, right? I really am a big swing trader. The only thing with futures is you need to have a bigger account for swing trading. Unless you're going to trade micros. Micros are a great alternative. I'm a liquidity guy. I love liquidity. I look at liquidity. I'm not an SMC guy. I don't play that game. I don't believe there's much success to it. I don't believe that there's so much going on with it. Everybody has their own style. I'm not here to shun anybody. But what I will say is that I've had very, very big success trading liquidity off the 4-hour and the 1-hour timeframes. Very, very much. I grew $1 million account to a 1.4 million profit in 3 weeks. Right. Wow. So and I was using liquidity, 1-hour entries on 4-hour levels, using daily confirmation. I have a program for that. Maybe we can toss some of your guys the videos if they want. I mean, it was a boot camp we did over several days, and I just taught the methodology. And I've seen traders have more success with that than any other system that we've rolled out, just because I think the sheer nature of it's a little bit more patient. But most traders don't want that, right? A lot of traders want to be day trading, they want to be scalping, they want to be clicking the mouse, clickety click, you know, and it's an addiction, right? It's an addiction to a lot of humans. So it really just depends on the objective. I'm a big opening range guy.
Sure.
I will trade the opening range, but that's kind of what I wanted to show today. I wanted to give some mathematical advantages to traders that they can really kind of understand whether they should be playing the breakout or they should be playing the reversal off the opening range, because there's two times during the markets where they're going to manipulate it most. First is off fundamental news, and then the second is going to be off the open.
Yeah. And I was going to say, I would love to hear your thoughts on that, what your kind of how you would approach the day, because I know for context, I just did a webinar event with Sean last week. We do have the recording somewhere. We could fish that out, maybe share that for people as well. It's on our email newsletters. But anyways, one thing that stuck out to me is that you're big on like the data mining kind of like quantitative stuff, like, and I love that, right? So you're looking at, you mentioned like high or low of day types of things, and, you know, spotting those opportunities within markets. So I'd love to get your thoughts on like, how do you approach a day like this? You've got S&P, Nasdaq ripping here on the open, gapping higher. What's kind of the Sean standard?
Well, for me, it depends. Like, first, you always ask yourself, are you a day trader or are you a swing trader, right? That eliminates the need for looking at certain time frames, right? If I'm a day trader, I'm going to use certain types of time frames, right?
Yep.
If I'm a swing trader, I'm going to use certain types of time frames. Don't confuse them, because you're always going to be looking at too much information, and it's really not going to be the right concept. But for me, well, there's two ways I'll trade. I'll trade the opening range on 5 and 15-minute charts, and then I'll trade scalping on 1 minute for like Heikin-Ashi charts and stuff like that. But what I want to do is I want to share some wisdom with the audience here, in that this can be done on any market. You got to understand that the open is where the most greed and fear is entering. Everybody's anticipating. They don't know what's going to happen. Everybody's getting into the day. And because the equity open is a stock market open, it's not necessarily a gold open, or it's not necessarily an oil open. The equity market isn't just a futures open. It's the New York Stock Exchange, and it's the Nasdaq open all over the US, right? And what that means is all the people that can't trade stocks in the overnight are just getting ready to go rocket, right? There, you got all the equity prop shops down in New York and Chicago and London, and they're playing the gappers, they're playing the moves, they're playing the volume spreads, they're putting the volume in. It's not the institutions that are controlling the equity market, it's the prop desks that are run by the big banks. It's not the retail prop desks, it's the institutional prop desks. Everybody thinks it's the hedge funds and all. No, that's just bullshit, right? It's the prop desks that are moving equity funds around. If you think about that more openly, you can start realizing, okay, who's really trading these equity markets? Who's really moving the volume, right? And what I like to do is I like to just, I mean, opening range breakouts are, you know, everybody knows the orb strategy, right? 5-minute high, 5-minute low, or 15-minute high. Or, I mean, a monkey can trade it, but it doesn't work all the time, right? A lot of traders get ticked out or false breakouts and they rip it the other way, and it's a wild west. And so what you can understand is that there's a daily ATR, right? So you'll notice here on my charts, I have two charts. I've got daily time frames. I don't use daily, I use 1440 minutes. It removes the gaps from the time frames so that I can keep an average true range to be a little bit more smooth. And I'm not really doing anything on the daily. I'm just looking at the average range of the daily. So you can see here I have it as the Nasdaq, the average range is set to ticks. No special settings. It's got 2,432 ticks. What I'm going to do is I'm going to take 20% of that range. Okay, so I'm going to take 24, let's just round it to 2,500, just due to the fact I'm just going to do some math here for you. So 2,500 times 0.20, 500 ticks. That's my benchmark. If that opening 15-minute candle is greater than 500 ticks, that's a manipulation bar. So what I do is if it's going to move 20% of the daily range on one candle, that's some significant movement. That's normally a probe and rotation. That's normally some type of manipulation bar. That's normally a very, very volatile open of, you know, emotions. And normally what I'll do is I'll fade the reversal back to the other side. I won't trade the opening range breakout.
Okay.
So, and what we did was we actually built an orb strategy for Tick Blaze that looks at comparing the orb size to every other orb size. So what we're doing is we're looking at statistical comparisons of the opening range relative to the normal behavior of every other day of that market. So if you look at today's Nasdaq open, how did it compare to yesterday's open? How did it compare to the week before and the week before? And what we realize is that opening range breakouts should be traded on narrow range bars. You have a higher chance of big explosive moves. So if it's a calm open, if it's a really small candle, or if it's a really moderate bar and it's not greater than 20% of the opening range or 20% of the daily ATR, then we're going to play the breakout, and you're normally going to see a lot more success in the follow through. But if it's absolutely something that is like, wow, look at that huge bar, that's they're sucking everybody in, and they're going to slam it, and most traders are going to get stop run, or they're going to get into a breakout and it's going to go against them, and it's just the same old, right? So
yeah.
And this is just 12 years of experience talking. I'm not saying that you need some complicated trading system to make money. Heck, we've got a lot of those, right? But it's most traders are trading the opening range, and it's a very easy strategy for traders to learn. And so I figured I'd talk about it here because I think traders can relate with it. Traders can understand it, right? So for me, I'm just going to take a ruler off of this. I'm going to mark up, right? That's 100 and that's the 5 minute, right? So we're going to wait, and we're waiting for 500 ticks, right? So what we're going to do, I'm going to wait for 3 5-minute candles, or just turn this to a 15-minute chart, make it easier, because it's a 15-minute bar. I'm not expecting that to happen on a 5-minute candle. You know what I mean? Like, so you can see here, here's a big bar, right? But if you go to the open and you just compare it to the day before, right? Over here, or if you go to the prior day, look at this candle right here. That's a great example. This big black bar, right?
Yep.
So that's the open. That was 2 days ago, or last week on a Thursday, right? So they push it down. They sweep the Globex low. That's that green line or that blue line, and they drove it all the way up. Well, let's just measure the bar. Like, it's anything over 500 ticks, right? It's like this. Look at that, 900 ticks.
Yeah.
That's 1,000 ticks. That's 40% of the daily ATR. And people don't realize that. People don't realize that that's 40% of this market's normal move in 15 minutes. This is a manipulation bar. So what we'll do is we'll just drop down, and I'll just take a short on a 5-minute bar on the first candle that closes in the opposite direction. So as soon as I go inside that, I'll drop it down to a 5-minute chart, right? And I'll show you when we come into it right there. As soon as that candle closes down, I'll trade that short, and I'll just ride that whole thing down. Yeah. And some days it's cleaner, some days it's not. Like, you can come here, you can just do 1, 2, 3 bars. You can see these 3 candles would have been greater than 500 ticks, but it didn't close back inside the range, and there was the breakout. You go to the day before, here it was, right? This is a great example of 1, 2, 3 bars down, greater than 600 ticks, it closed back inside the range, and there was the huge big move to the upside. Yeah. So I'll show you here the entry pattern, because this is the most important part of the strategy. Yep. The easy part is the math. Okay, everybody can do the math super easy. You can calculate the daily ATR doesn't change within 14 days. So 500 ticks, just remember that. Nasdaq's normally a 500 tick open. You can basically, anything greater than 500 ticks, you're normally going to get a manipulation movement, right? So what they did was, if you look here, they drove it down 1, 2, 3. You can just do it a 15-minute candle. You can drive it down or put it on a 15-minute bar. That would have been one big down bar, right? And it'll sometimes break out and play the game. And when it starts doing this, like this, I don't enter on the first close. If it starts giving me a bunch of wicks, I want 2 higher highs and higher closes. I want to see price go higher high, higher close. And you'll see it drop down again. And there it is. You can see these 2 candles, 1 close, 2 close. As soon as that happened, boom, the whole move started. Yeah. And it's really just an easy strategy for traders to understand, right? It's an easy way for traders to play any market. You can do that on the Russell. Russell's independent, so you just check the daily. So if you go to the RTY, the ATR is 450 ticks. Let's just do the math on that for a quick second. Let's just ride that to 450. So 450 times 0.2 is, my calculator's not working. So 450 times 0.2, 90. So if you got 90 or 100 tick open on the first 15-minute candle of the Russell, it's a manipulation bar. And take a look at what happened here. If you look on this market, okay, you can see here that this candle was greater than that. That's a big 15-minute bar. They drove it down, but as soon as it closes back inside of that 15-minute range, it just rips all the way back up. Yeah. And so you can drop down. I suggest dropping down to a 5-minute on this. because what'll happen is you'll get the price action a lot better on the 5 minutes. So for the entry, I'll show you here. The Russell dropped down. I want higher high, higher close. So you can see there was a higher high, higher close right here. This was not a higher high, higher close inside. This was a higher high, higher close inside. This closed higher than all of these, and that was the entry that took it back up. Yep. A little bit messier there. This one here is a great example. You can see here is 1, 2, 3 bars up. That's one 15-minute candle, right? And take a look. They drove it back down. One big close in. I would take the short on that bar and drive it all the way back down.
Yeah.
And it's an opening range fake out. Everybody's getting sucked in for the breakout, and everybody's getting played.
I was going to ask you, Sean, so let's say you enter on that candle. How do you the next question, obviously, there's the entry, stops, targets. How are you playing that? Because you say like riding it down. Do you use a trailing stop loss? Is that kind of your approach?
Great example. So let's just draw the box, and I will show you this right here. So there's the box right here. 1, 2, 3. Okay. So I can already tell you that I measure those 3 bars, and I know that if it goes outside the box or closes back in, normally I want an expanded range candle. If I get one big expanded range candle, which is the body is greater than 50% of the range, that's an ERC. An expanded range candle is 50% or greater than the high-low range of the bar. So that to me here is a good enough close. I would take the short on the break of the low. I wouldn't enter on the close. I want to see a break of that low. So I would put a sell stop order right here, right? I would wait for price to trade through it. I'll put my stop above the high. And I wouldn't trail it. I would just run it. I would just let it run, let it breathe. This is a big move happening, right? And so it's going to do what it's going to do, but it's always 99% of the time it's going to go and take the other side of the range.
So it's so interesting that there's 2 things that stick out to me in my own kind of just staring at charts and studying this stuff. I do a lot of back testing and stuff as well. A long time ago, I played around a lot with like news, like post news trading. Like for example, the 15-minute, dropping down to a 15-minute bar, watching NQ on CPI day, or the euro dollar. I mean, I'm trading on all the different things that you could do. And I found that like a lot of the times there would be kind of that huge, the bigger the candle, the bigger the wild ride to the up or downside, the more significant obviously that's like vol expansion, you have volatility going crazy, and then that volatility collapsing back down oftentimes kind of came with a reversion back the other direction.
100%.
Yeah. And then the other thing, just to add to that, is that numerous times, one of the most observable patterns in the last few years, I feel like, has been the weekend gap down. Like, for example, when you have pandemonium over the weekend, people terrified about, there was one that sticks out to me as like August of 2024. There was a big, ginormous gap down on this Monday. This was, it was like a gap and fall, or the futures market opened up, gap down, and kept going like crazy. This was on, concerns about this was a post NFP move, and the Bank of Japan is going to hike rates aggressively, all these sorts of things. I'm pointing it out because it's almost like there's so often these moments of peak fear, and you're kind of dropping it down even to like intraday levels. You're looking for those kind of extreme moments where fear is high, people are very convinced it's going to go one way, and then kind of that the manipulation, the kind of false move that really suckers people in, oftentimes can be reversed, and you can kind of ride the other direction. So really cool concepts there. And you also mentioned being on the swing trade side of things. Before I want to ask you about that, I just want to mention too, guys, in just a little bit, we are going to be doing a giveaway here thanks to you guys over at Prop Shop Trader. Producer has the link for that. I think we've got the link to share here. If you guys want to enter a giveaway, if you've never heard of Prop Shop Trader, I want to just give Sean a chance to speak. It's his world, not mine, but I can give you the highlights from a perspective of, we talk to all different prop firms, etc. Very few have the offers that you guys do, the amount of stuff you have available for equities and futures traders. So we're doing a giveaway here, which we've just linked in there. Throw your name in the hat. You might win something here. Why not? Sean, tell me just bite-sized example. Why Prop Shop Trader? Why the way that it's built? You guys have a very unique offer. You really stand out, but what makes you better than the rest?
It was really about just competitive landscape, right? Like we were trying to beat an Apex or a Lucid or a Traderify. Like they have the monopoly on the NinjaTrader platform, and We're on our own technology stack. We also work with other platforms. And so for us to break into a space that's already highly competitive and take market share, we wanted to look at two things. We wanted to look at what can we do the same that everybody's used to, because nobody likes going into the grocery store. Coke is Coke and Pepsi's Pepsi. You don't try to teach them any. They're going to buy what they're going to buy. If it's too different, they're not going to like it, right? So we have a lot of accounts that are pretty much the exact same as the top 5 firms in the world. You're going to see that maybe we have, I think, maybe $1,000 more in payouts than say some of the other firms, and that's just one way of just giving more value to the clients. But for us, we also came from an equities background. You got to remember the equities market's regulated by the SEC. Futures is regulated with CFTC. So for us, we spent hundreds of thousands of dollars building out the legal requirements to be able to be compliant for equities. Equity prop firms can't do the same things. You can't even pay a trader out in simulation in an equities. It's against the law. There's case law against it, right? So for us, we had to build the futures infrastructure, and then we had to build the equities infrastructure independently to be able to cater to an industry that doesn't even happen, right? You're not going to see these big futures firms just go into equities. They would cannibalize their business, right? Because it would be completely different than everything they're used to. We technically built 2 different businesses inside of Prop Shop Trader because the futures infrastructure is completely different than the equities. And we wanted to build something that could be compliant. We're represented by one of the biggest legal firms in Chicago and New York, and they work with some of the biggest names in the world. And it was a decision for us to spend the time and do it right and give ourselves an advantage over others because there's no competition in the equity space. Like if you're going to go into the equities prop desks and you got to either put up your own capital, you need to get a Series 6 or Series 7, and you got to do all these stuff. And it's like, no, we didn't want that. So we built a model for swing traders and day traders in the equity space. We also built a model for day traders and swing traders in the futures space, right? And so we've paid over, I think, 6 or 7 million now in payouts. We're not a large firm, we're a medium-sized firm. We like to look at the prop firms in 3 buckets. You've got the up-and-coming starter firms that everybody's nervous about. You've got the whale firms, which everybody understands. You got the medium firms, which is where you get maybe 10 or 20 really, really reputable firms that everybody does multi-propping with, right? And multi-propping, we understand that traders are going to buy all of our accounts, and then they're going to go to the next firm and buy all of those accounts because the strategy isn't one account anymore. The strategy is not, let's just trade for Prop Shop. It's let's trade for Prop Shop, and then let's go trade for Apex and Lucid and this, because they're just maxing out their exposure to as many accounts as they can get. So for us, it's a volume and a numbers game, right? We're literally just looking at trying to provide as much value to as many people that want to use our accounts and to be able to be as transparent with how we do things as possible, right? We do things the way we do it. We have experience. We've built our own technology. And what's really nice is that we have our own OMS, right? We're an actual, TickBlaze is the provider for the main core technology for Prop Shop. And the reality is that TickBlaze is a vendor with the CME, right? We spent a year going through compliance to be a partner with the CME, which is very rare to do, right? So there's only 4 of us in the industry that are: Ninja Trader, us, Rhythmic, and DX Trade. So for us, it was a matter of just making sure we dotted our I's and we crossed our T's and we did things right? And we have a lot of clients that are grateful for that.
I think what's really cool too is you guys have such cool software that you can also, or that you also offer, people within your trading platforms. Like that is pretty legit, that you've got the whole, TickBlaze universe, all the various indicators that you offer. And it's kind of like you get the best of both worlds. You get powerful tools and, a prop shop. I think the medium size is like honestly ideal, because then you're still, some of the big ginormous firms, they have significantly more overhead as well, and they can't pass on that more aggressive competitive
support's
pricing.
Longer. You get support is much longer to get a reply. You don't know if you're just another number on a sheet of paper. I have nothing negative to say about the big firms. I know the owners. I know some of the owners, not all of them. I know some of the owners, and the reality is that they're just so overwhelmed with the volume. And great for them. I'm glad that they're scaling. We're scaling, but just, in our own way. And, the truth of the matter is that people want to be treated like respectfully, right? They want to be able to send an email in and get it replied within 24 hours, not 3-4 days, right? And that's the truth of the matter, is that you're not going to get that with the big firms. You're going to get that maybe with the medium firms, right?
Fantastic. Well, again, I was super impressed when we did the webinar event together, just getting a chance to meet more of your team. So I would definitely encourage people. We've dropped some information in the chat. We've got 2 things for you. If you're interested in checking out Prop Shop Trader, take our promo code with you. It's 50% off for several of their different challenges. So you can get that information here. Use that code if you're interested in taking the challenge. And then also we're doing a giveaway during the event here. We've got that giveaway link still in the chat. There will be an announcement of a winner shortly on that. So should be fun. We just had the open here, Sean. We've got stocks moving.
We're almost at 500 ticks.
Yeah,
we're almost at 500 ticks on the first candle. And there it is. There it is. Look at them driving it down. What they're doing, so everybody wants to understand, is that you got to remember, for the market to go up, it has to go down to get liquidity first. So the market needs fuel. Think of it as like you're going on a trip to your camping trip. You're going with your family. You're not going to go to the camping trip on an empty tank of gas. Right. So when you look at the market, the lows, big pivots, 3-bar pivots, levels, I try to keep things super, super simple, because I've spent so many years making things so complicated that it doesn't make me any more profitable. So reality is, you've got the Globex low for the European session. You got the Globex low for the Asian session. That's the red and the blue lines. Right. And when you look what they're doing, they're driving it down. Maybe they're going to try to fill some of this gap. Who knows? All I know is that they're trying to get liquidity. They need liquidity. If they're going to go up, they need liquidity. But if they're going down, then it's just going to keep going down, 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 down. And so we won't know that until we see some patterns. But you can see it already hit 524 ticks on that candle. And look where they just stopped. You see where we're starting to catch a rally right here on that bar? Where? Right on the Globex low. So there's liquidity there. There's a lot of stops there. There's a lot of whatever, you can call it whatever you want. But there's orders there, and they need fuel. And so we're going to watch this. We're going to put a box around this candle, and we're just going to watch it. And we're going to wait. We're going to wait until we see some type of a manipulation move where I can see if we can play the range reversal on this, because that's a manipulation bar.
I love it. Yeah, it's it's a completely different universe than mine. I'm definitely not on the intraday side of things, but I come to appreciate all the different styles of traders that we have on here. It's just good to see people's methodologies. And what I like about your style, as we already discussed, is the concept of like the tools that you have for back testing kind of add a layer of like, this is not just, it sounds nice. This is stuff that you've studied, that you've actually put in the work to mine out, hey, is there something here? And I think that's critical. I'm definitely more on the macro fundamentals, the swing trade side of things. I'd be curious just to hear your thoughts on the swing trading.
Let me load a desktop. I have a desktop that I actually use for swing trading, so I'm going to show you what I do.
I'd love to see it.
It's going to give me a second.
I'll take over the screen for a second.
Sure.
Get that set up.
Yeah.
So guys, we've got the stock market here now up about 0.9% here. SPX, we're looking at NAS, a little bit of a blip to the downside, but now showing some recovery. Same thing we have over on the gold side of things. To that point about gaps, we are now on the gold side of things here. Check this out. We've got the attempt to come into this gap area. We'll see, because again, we're kind of seeing support hold here over the last 10 hours or so. If we close sharply beneath that area, very possible that we are headed to fill this gap here. For me, I'm already long gold, so I wouldn't, if it happens, it happens. I wouldn't mind if it keeps going higher here. I'll be, as always, looking to trail stops. What I am really looking for on gold, just for the gold bugs out there in the room, I'm looking for to see if we can break through this 4,200 level. We talked at length last week about the put call wall here. We got a huge call wall right around the 4,200 level that I'm watching. If we can break through those areas this week, that would be fantastic. That would potentially give us kind of some powder keg room to continue to the upside. So I am watching gold on the New York session here today. Looks like it's showing a little bit of a revival. The other one that's really interesting here is just keeping an eye on oil, which huge push last few weeks. Topped out on Friday, a little bit of red on Friday, following through to the downside here today. Got this kind of longer term trend line here that's being tested. So we'll see if buyers can get back above and beyond that area or not. Of course, geopolitical headlines are inherently very difficult to predict. You could have anything come out in the next 2 hours from either side of the conflict. So continuing to watch that. Sean, are we good to go on the?
Good to go. I'm just going to change.
Right.
I'm going to change the monitor because I have
Gotcha.
an ultra wide screen. So I'm going to stop sharing here and going to share another one here.
Yep. All good.
So let me show you something here. So can you see that?
Yep, we got it.
Okay. So essentially, well, let's just talk. It's interesting. You said put call wall inside of TickBlaze. We have a tool here. I can't see because I can only share one window at a time, but there's a little button right here at the top that this is an options infrastructure. So this allows you to put calls and puts right from the chain. We built an infrastructure of data inside of the platform. So what you're seeing here on the chart with the Nasdaq is the call. These are the weeklies. Nice. These are the weekly levels right here. I can change it to a 0 DTE setting for max gamma exposure, but we're the only platform in the world that has actually built options levels inside of it. Most people use it on an external web-based browser like TickStrike, or there's a few others like MentorQ and a few other great ones. Again, there's Spot Gamma and a few other guys that have some big stuff out there too. But those are all on independent platforms that traders aren't trading on. So they have to do their analysis on one and they have to come and execute on another. We decided to build a database infrastructure because we're a data vendor. So we built the hub so traders can actually see where the option chain is. This yellow line is the gamma flip line for the week. So that's a big level at 29,000. That's the weekly gamma flip. If they get there, that's a huge trade. Look at this at 2,800 down here on the Nasdaq. Look at that put wall right here. That's a massive wall in the weekly, right? So if you're a swing trader, these will matter to you. You asked what's my thoughts. So let's take a look at oil because you just talked about oil. And you were basically just saying, you expect a downtrend. Well, I want to see if I I'm going to let it load here for a second, and I'm going to see if we're in alignment with that because I'm going to just show you how I would trade it to the downside. I do believe that your analysis is accurate in the short side of the oil market. It is to the downside. I'm going to move this over for a second and just so I can see the higher time frames. So if I'm looking at the daily, we're in a downtrend. Okay. But what's really, really important here is that this is the daily's actually in an uptrend, excuse me. And the 4-hour is in a downtrend. So for me this is a micro crude oil. If you can look at the minis, if your stomach can handle that type of margin in the overnight. But as a micro trader, like the weekly is crossed over, the daily is in an uptrend. So I anticipate oil to try to trade higher. And so for me, if you look at the levels, we just swept the level here. This is liquidity off the lows. You can see these lines. They just took liquidity here. I would wait for them to trade up through these levels and then trade it long. If you take a look at gold, let's take a look at gold because you're a gold trader. I see you do a ton of gold analysis.
Too much.
I enter on the 60-minute a lot. I enter on the 60-minute a lot. So let's take a look at this, right? So I don't know why I'm covering there. I never took a trade, but either way, let's take a look at this. So we've got the daily is consolidating, but they were down in a very big downtrend. You see this box I have here? So this is the weekly compass. So the market's not going outside that box with a 95% center of accuracy. This is the average range of the week. So what we do is we look at what's the expected movement of this market for the week, right? So I can expect that it's most likely going to go all the way up to 4,300, or it's going to drop all the way down to 38, not going to go past that this week, right? So that's why I put this on my chart to say, okay, well, where is my trading compass for the week? Like, where am I making my decisions? Am I plotting my levels way above that? Am I plotting my levels way below that? I don't want to be doing things that doesn't make sense. But I do think the gold market's going higher today because they just took out all this liquidity on the hourly. You see these are 4-hour levels. Yeah, these are 4-hour levels. And so when you look at what they just did, they came into all that liquidity off the lows in an uptrend on both the 4-hour and the hourly. Gold's going to the top. Gold's going straight up. They're going to go all the way to 4110 today. And they're going to try to take those levels because the fuel down here, all the big guys need to build that pump. They got to take it so they can go camping. Right? They can put the gas in the tank and then they can go all the way to the other side. They're going to drive down the highway. And that's what you got to think about. You got to think like common sense is like this market, in order for it to go higher, it needs as much orders to fuel the pump to go the other way. And so that's exactly what gold's going to do today. It's going to rally up. And that 2 time frame trend, I mean, it's easy to see that.
Yeah. Makes sense. Well, and again, as you just pointed out with your kind of liquidity flush to the downside there on gold just a moment ago, you know, you're now getting the, look how quickly that flipped back into holding that same zone of support. You've got your moving average there as well. Also, with oil, I'm a little bit more on the bullish side as well, actually. Like when it comes to this downward trend line, that's more of a, can we get a breakout on that level? I'll just show you my side of things just to throw in some macro overlay too. So this is, you know, our reading for oil is bullish as well. Kind of like yourself. I again, this is, to me, this is heaven. Incredible. Because I just love talking systems and designs and charts and stuff. So to see your, you know, way of thinking and to cross it over with what we build over here, it's just so much fun. Love it. So yeah, so we track like seasonality stuff. I don't know if you play around with seasonality 100%. At all. Love seasonality. So we'll keep an eye on, you know, seasonal parts of the year, month by month breakdowns. We watch the commitment of traders data, which has been, you know, slightly increasing. We've seen some accumulation on institutional side for oil. Same thing, 4-hour daily chart trend kind of flipping more positively here recently. So we'll keep an eye on it. But I think definitely interesting to see where oil ends up this week. And I have kind of a weird macro mix right now. I'm both simultaneously kind of willing to buy oil and also willing to stay long gold. That correlation has been pretty inverse the last few months, where you've had higher oil means lower gold and vice versa. But traders who are living beyond or know beyond just 2026 will know that commodities can all rise or fall together. It's not necessarily perfectly one kind of size fits all there. But I know we are tight on time here this morning, Sean, so I don't want to keep you any longer. If you have other calls or things like that, we've got a minute to go. So before we move along here, I mentioned it earlier, guys, we're doing a giveaway courtesy of Prop Shop Trader. If you're interested in joining that giveaway, we'll drop that link one more time here. And hey, take some time out of your day. If you are an equities or futures trader, go check them out. Prop Shop Trader has some really cool offers, and they're offering a huge discount to our subscribers here on the live stream. If you use that promo code A1 Trading, that's going to get you up to 50% off a bunch of their different challenges right now. So explore it, see if it's right for you. And again, I would say, Sean, just from the outside, my personal thing, because I'm a chart junkie, love looking at different indicators and charts, I would say that the Tick Blaze overlay on top of Prop Shop Trader is enough for me. I would pay a premium to other firms personally if they had the right tools for myself. Like, so if I looked across all the Tick Blaze universe and I was like, hey, this fits in with my stuff, just personally, that would be a reason to choose a particular firm. So it's really cool that you guys have built such a fleet of amazing software, and you are breaking in further and further with the prop firm side of things with Prop Shop Trader. So I want to thank you for coming on.
Thanks for having me. Yeah, thanks for having me, Nick. And just so everybody knows, you can have up to 10 payout accounts. If you are buying accounts, you can have 10 accounts. We're one of the only firms that does this. You can get paid out in as literally 3 days, you know, after you get through the eval, or if you buy a direct to funded account. And if you're on the Tick Blaze platform, we have desktop application, we have web application with TradingView, and we're getting ready to release our mobile app here very, very soon. So
very cool.
You guys will be able to trade on your phone, use trade copiers on your phone. You could be traveling in your car and be placing trades if you do that kind of thing, right?
Yeah, very cool.
Yeah, I mean, I'd love to have you guys back, Nick, and we can do another live stream. Maybe we can run it, you can run it, whatever you guys want to do. And if you're interested, we can even do algo trading. We've got a lot of back testing and automation, and we've got a lot of automated systems and stuff like this. So whatever your audience wants, let us know. We'll put together something curated for you guys.
Love it. Love it. Cool. Well, Sean, again, thank you for your time today. We'll see you on the next one. I'm sure we'll do more of these. And with that said, peace out. See you guys. We've got Tiger Barry taking over the stream just after this quick break. So Sean, everyone,
take care, guys. Thanks,
thank you for being here.
Have a great morning. Bye.
Yep. Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy Monday. Hope you're doing well out there. Let me know, as always, what you guys are looking at. Tickers, anything. And I'll be definitely be happy to check them out for you. A little bit of suffering today because I was at my pool all day on Saturday. So I got a really nice sunburn going on underneath the old clothes. So yeah, if you hear me crying, that's why, but it's okay. I'll be back. I'll be better. I'll be better soon. Got to have at least one sunburn a year, apparently. That's my thing. But anyway, yeah, I'm very stubborn when it comes to sunblock. I hate the way it feels. So I did still spray some on. And the funny thing is I didn't spray all around. So I've got one white streak down each arm where I sprayed. So I just did a terrible job about blending it in. So anyway, pound yen, says Bogo. Pound yen. I like the pound this week. It's about a 66% beat rate on the fundamentals. It was also the biggest winner, I do believe, on the COT report. As far as currencies, yeah, look at this. So the big banks, the institutions, the smart money had a little bit of a turnaround. Now it's still net short 65%. It's only a 35% clip as far as longs goes. But both of these numbers over here were pretty decently bullish. You had 13,000 added longs, and then you had 2,500 closed shorts. So each of those individually is a nice bullish number. Added together gives us a nice 5.5% net weekly change from week to week. So I like that. I also like that the pound, again, like I just said, has a 66% beat rate over here on the fundamentals, on the surprise index. So that's a really good start. Now, the dollar index, in retrospect, I do believe was up here as well, 2%. So a 2% clip, which I think is added mainly by the geopolitics, because we know the data is going backwards as far as the beat rate. It's only a 40% beat rate. And plus today, I know it's more medium impact stuff, but I do believe we had some durable goods orders that missed, even though I think they're yellow folder over here on Forex Factory, if I do remember right. Yeah, durable goods. Yeah, durable goods as well as the core. So that you had a bearish number on both of those items as well. So that's all we get today for U.S. data. Obviously, we do have the cheeseburger consumer confidence report coming out tomorrow at 9 a.m. More medium impact. I call it the cheeseburger report because I got to be different, you know. And then obviously the big day is Wednesday, where we get Chair Warsh's second presser. See if he's a little less nervous. See if he talks about his 5 task forces, which we now know all the names to. We didn't know that on his first presser that he gave us last month, but we do now. I know there's a little bit of controversy on 1 or 2 of his picks. So it's going to be interesting to see what the reporters have to ask him about that. I'm sure he'll talk pretty good about the inflation because our inflation numbers have dropped pretty nicely, actually. And then we have the PCE report coming out on Thursday, right after his speech. So is the earlier inflation cooler rates, is that a prelude to the PCE? Oftentimes it is. Not always, but oftentimes. So that right there could give us yet another bearish box on the dollar. Could push us down into the 30s if that PCE report comes out cooler, this core PCE one right here. So that will be on Thursday, and some unemployment claims, normal weekly unemployment claims. And then I think that's about it for the dollar. We do have the University of Michigan sentiment coming out on Friday as well. So after a 1 week hiatus of absolutely zero US data, it's nice to see some data on tap for this week. And not to mention the presser, the lip flapping session from Kevin Warsh on Wednesday, which I do believe will have a little bit of a different day as far as the schedule goes on that. Yeah, we start at 10 a.m. I guess it'd be 11 a.m. New York City time, and we'll end at 2 o'clock p.m. So 11 to 2 on that day. So adjust your schedules. And definitely be here to watch the show. So anyway, pound yen was the first one I saw. So we'll definitely take a look at that. Pound dollar says Passetti. Yeah, we'll take a look at that. I'm a little hesitant with pound dollar just because, well, we've officially kind of broken a structure to the downside over here. So I'll show you guys what I'm talking about. But let's look at pound yen first, since that was on the list, the first one on the list there. Now, pound yen. So the original play I had drawn up for this was back here when we had this head and shoulders kind of starting here. I was looking for that 1-to-1 retrace from the neckline to the head, flip that around below the neckline. That basically put the 1-to-1 down in the bottom part of this daily demand, which if I go to the daily time frame, you'll see what I'm talking about. Talk about this candle here. But there was just, another, that was the original thought. That was the original plan. But again, everything kind of changed on us and we made another push higher, about 150 pip push higher. So that kind of opened up what I think is a little bit of at one point, it was a little bit of a demand zone in this area. But I just felt like this was too high on the curve, guys. You guys know me. I search for discounts. And if I'm looking at the true curve, the true swing low, swing high, I would probably have to look, just looking at this 4-hour chart, all the way down here for the swing low. The swing high would be up here. So that would put this up here in the premium zone, the premium range, the expensive area. So I don't like the idea of buying high on the curve like that. Obviously, it just depends on what time frame you're looking at. Drive it down to a 1 hour, well, that changes the picture a little bit. Puts our swing low down here, swing high. So that would still be in the middle. That would still be diddling in the middle, in my opinion, guys. So I just didn't like this. We did get a little bit of reaction once we did bounce into the 2-hour confluence part of it right here. We got that little wick in. It pushed us up, but just went sideways. So if it was strong, guys, if this was a strong zone, we would have likely kept going. We didn't do that. We just got lazy and went sideways. So yeah, I didn't like that zone. So the one further down, the 215.5 is still the one that I'm the most interested in. Sweep this liquidity over here, sweep this liquidity over here. Okay, accumulation for the banks, and that's why I kind of drew up this contraction box here. And then I'd be looking for a push up for sweep, push down for sweep, drop into the demand, collect unfilled orders from the 4-hour and the daily for that possible push up. So that continues to be the play that I'm looking for on the pound yen. And again, it's aided by the COT report going bullish for the pound, and also bearish for the yen, because the yen is at the very bottom of the list. So heavily short overall for the yen, but they also got rid of 8,300 long contracts and added 2,100 short contracts. So the math to that works out to be 3.5% to the downside. So the COT report, coupled with the fairly strong beat rate of the pound, I like that. Now remember, the yen is up there as well. So that's the only, that's the only piece that I somewhat dislike, because the yen is right there with the pound. But the COT report definitely makes that picture look good. And at the end of the day, we may not even get a drop down there. But if it does, I think that might be a pretty decent discount down here at that 215 area. So that's what I'm looking at, that whole yellow setup, guys. I drew this up for you guys last week. That's what I would like to see for the pound yen. But it's got to slow down. It's got to base out a little bit. I don't want it to just get too hot and heavy and just drop straight through, cut through like a hot knife through butter. So I've got to see a little manipulation game getting played down here. just to see if we can get that last spike down. The last spike down, Wyckoff spike. Okay, so that's pound yen. And then as far as the pound dollar, this one over here, if I go to the daily, we've pretty well taken out this little bit of support that we did have throughout here, as you can see. So that almost turns this into a little bit of an impulse move to the bearish side. So I'm being a little more cautious. Remember, I drew this demand zone up over here when price was still in this area, but then we made that bigger move. And now at this point, it's turned into kind of a miniature downtrend as far as I'm concerned. Let me get my thing fixed here. So if and when price comes down to this 4-hour zone down here, I'm just going, and I think I touched on this on Friday. I'm going to require not a 1-hour bullish close. I'm going to require a 4-hour candle. So I'm just basically upgrading my fear gauge, my personal fear gauge, to say, okay, prove it on a higher time frame after the bounce. So bullish engulfing candle with a wick underneath it, the VSA picking up. It's all about volume, guys. So that continues to be the zone I want to look at, the 132.50 area, but it's just going to have to jump through an extra hoop for me. Okay, so that's pound dollar, and just go back over here to the edge finder. Pound yen obviously leading the way. Pound dollar is +7. So yeah, the scoring still looks pretty good, and I do like the pound this week. So that's going to cover those two pairs. What else we got? Pound CAD or a regular man? Yeah. Go look at pound CAD. So CAD does have a 57% beat rate. That's a little more on the neutral side for me as far as the fundamentals go. Go look over here. I think Canada was pretty well neutral. Yeah. So Canada was a minus 0.78% decline. That's a little neutral in my opinion. As always, guys, me personally, I just kind of look at that -2% to positive 2% is a little more on the neutral side. Not really a strong enough signal either way from the banks, the institutions, the pension hedge funds, all those people. But if I match it with the pound, obviously the pound is, obviously for all the reasons I just listed, looking pretty good. So pound CAD, and then as far as the scoring goes over here, bullish +4. So it's just barely tall enough to ride the roller coaster. So on that note, we'll just go have a look. Go have a look. Okay, so on pound CAD, there's kind of a double whammy here. So number one is we bounced into an overhead mitigated supply zone. This is the one that's like weekly, I think. Let's go double check. Weekly, monthly, yeah, monthly. This is a monthly supply, guys. That's been in this for the last year, in all fairness. Since March of 2025, actually, so more than a year. Talking about this monthly zone, if I can get my thing to work. Oh, come on. Why can't I grab that? Grab it. Oh, you stubborn thing. Got all this. Catch it. I cannot catch it. Why is it not catching? Oh, my gosh. Anyway, you guys see this candle up here. That's the monthly. And then we go down a little deeper into the weekly. I think this might be a weekly. Is that right? No, this is the daily. Okay. So yeah, so that's currently where we're at, is in that daily. So if I'm trying to buy pound CAD, I would prefer that we break and close above that structure at minimum. At least break and close above the rest of the daily, since we're already in it, and then look for another retracement at that point. I think probably some of these other pound pairs, especially pound yen, pound dollar, which we kind of went over, might be giving us, for the way I trade, a little bit better of a picture. I just don't like trading anything that bounces into a zone like this, unless it proves it's strong enough to chew through it. And why do I have two different moving averages here? There, that's what I'm trying to get. Hold on a second. Yeah. Anyway, and then, yeah, not to mention the moving averages are a little bit out of whack as well. If I go reset this, You can see over here on the daily, we've got the 8 below the 21, which is not a surprise at all, considering it's been in the supply zone overhead. So that's the alligator's mouth opening to the downside. I don't like buying when it's doing that at all. So again, I need the structure broke to the top side. I need the moving averages to swing back around. For me personally, if I have any interest whatsoever in buying this, the EMAs look good on the weekly, the EMAs look good on a monthly, but it's the daily that's my problem right now. Now we are in a demand zone as we speak. So could this zone right here offer a lift? Okay, this would be a daily zone right here. Could that give us a lift to the upside? Well, whether it does or doesn't, the fact remains we're still in that overhead supply. So I don't like pound CAD at all. I would much prefer pound yen personally. Ion Q. What in the hell is Ion Q? Is that a ticker? Yeah. We don't really do a whole lot of stocks on this channel, but let's see what you're talking about. Oh, okay. Do I go short? Your question is? Well, I don't know anything about the fundamentals, but if I'm just looking at the technicals on this, we are pretty low on the curve. If I look at this swing low, this swing high, we're clearly pretty low on the curve. It's already made a big move, and we're starting to get close to a little bit of demand down here. Okay. Now, this isn't an exact, but there's going to be some demand down in this area. And by the way, look at the leg out. This candle, this candle, this candle, giving me red volume spread analysis candles. So I would be afraid of shorting anywhere near that zone, unless you're just trying to take a few bucks. But you got to keep in mind, it is, yeah, obviously the moving averages look great, but it's also pretty low on the curve. So quite a big move's already been made. So I don't want to spend too much time on stocks. I know we don't really handle that over here, but you are in a discount zone. So I personally would be afraid of shorting something that's already down in the bottom third of that range. So, you know, obviously not financial advice, do what you want, but unless it breaks structure to the downside, I probably wouldn't have any interest in it. Right? Something like that. So anyway, hope that helps on IonQ. Huge gap on gold, says machine. Machine. Yeah, let's go look at that. Go look at gold. I know that's everybody's favorite on this channel. So remember, gold and silver, I think, are given a little bit different structures. So the gold, if we just look at the daily over here on the right side, and I just toggle from gold to silver, you'll see that this swing low is higher than this point over here. Silver is the opposite. Silver is still giving us that lower low. Okay. Higher low, lower low. Higher low, lower low. So, I do believe, was we still getting just barely a bullish read on silver? Yeah. Silver gold +4. So yeah, again, just barely tall enough to ride. So on both of these, I've got to see some structural breaks. I think gold would be my personal favorite just because it has already had a higher low, unlike silver. So if I turn my drawings on, you'll see, of course, we got those call walls up here that I've been paying attention to. Again, guys, that's Nick's new tool that he has in the crowd sentiment section, putting call walls. Definitely get your edge finder if you don't have one, guys. There's all kinds of good things in here. The call walls at various price levels on some of these ETFs. Obviously, for gold, we look at GLD to see where those blue walls are. Okay, as far as the calls and the reds for the puts. Like to see breaks and closes above those. So we have to measure it out from, in this case, GLD over to XAU USD, measure out the percentages to kind of map those out. So when I do that, that's why I came up with these blue lines up here, which just so happened to coexist with the supply zones that I had already drawn up previously. So it is nice to see that confluence. Same information, just two different ways of looking at it. But when you lay them on top of each other, pretty good confirmation, I think. So yeah, that yellow line is exactly what I need to see. Now that I know we've already had a higher low, I just need to see a higher high for me personally to get excited about trying to buy some gold. So break that structure right there. Yeah, there is still technically a little bit of supply that could possibly be left in this old 4-hour supply zone here, this old daily supply zone over here. Okay. but at least break the call wall, at least break this 30-minute supply zone, and at least break the swing high. Preferably just chew through the remnants of this. And that's why I drew the peak of the yellow where I did. I'd like to see it break all that and then retrace. And then retrace and find us a new supply zone at that point. There's nothing to draw yet because I just have to see some more candles form. So that's my thoughts on gold and silver. But again, I'm more excited about gold, if anything, right now. Silver has still got some work to do as far as I'm concerned. And it would be nice to see the Edge Finder give us a little bit higher of a score versus just a +4. Okay. It's a little easier to get a little more aggressive when you got +8, +9, +10, +11. You get a few more indicators in your favor. It's trending in the right direction for gold because the data for the Dixie has dropped quite a bit. We have gotten quite a few red boxes over here. Just going and taking a look at the economic heat map. Six bearish boxes. Plus, again, even though lighter impact or lower impact, the durable goods orders, goods that last 3+ years. Okay, you get past your necessities, your food, your water, all the necessities, and when you start spending money on the durable goods, that's usually a good thing for the economy. But again, those reports missed. So that's all benefiting gold as far as the data. But again, the dollar's being propped up by the Middle East situation. So just a little bit of a conundrum right now. And that's where we're at. So, so yeah, that's my situation on gold for you. Let's see here. Let's make sure I didn't miss anything, guys. Got GU, I got that one. Do you look at the COT changes mostly or at the score on top setups? All of it. Top setups is my favorite page, but probably my second favorite page outside of the, outside of the Eco Surprise Index. It's right there with the COT report, man. I want to be on the side of the smart money. That's where I want to be. Okay. Put to call ratio is obviously really big as well. To see where those, the put to call ratio. COT, for me, the COT report's probably number 2. Okay. Now, just in items by themselves, COT report would probably be my favorite because the banks make all the money, do they not? So in general, would it not make sense to be on the side of the smart money? Right? And then obviously you got the retail sentiment to start looking for your contrarian signals, the put to call ratios, the options flows and all that kind of stuff. So it really just depends on what speaks to you. That's just what speaks to me. Okay. If we're just looking at the top setups for me, again, I like the COT. That's how I met Nick, was from the retail sentiment, actually. When I started digging deeper into the sentiment side of things, and then I discovered the COT report, retail sentiment. Of course, he has the put to call ratio and some other items in here for the contrarian type signals. That really, whenever I started lining that stuff up with the fundamentals, that's when everything pretty well changed. Okay. So this right here is obviously the clear favorite because it shows everything on a one pager to where you're not having to go back and forth. So definitely, guys, if you have not gotten an Edge Finder, get it ASAP. It'll change your life. By the way, Ola Prime is there as well. If you guys are looking for a discount, Nick does have the 20% code there. A1 Live. All you got to do is just go to olaprime.com. If you are looking for a new challenge account, you've also got the QR code up there as well on your screen. And yeah, come join the party. I've got me a 100K Ola Prime account. We do use Trade Locker for the platform, and it's by far my favorite. It integrates in Trading View charts. And it's one of the newer ones too. And I just freaking love it. I got to tell you guys, it's so simple to do. Looking for your, as far as your reward risk, creating your orders and all that, gives you an option of putting in a dollar amount, a percent of your account value, which was big for me because I'm all about a specific percentage of my account per trade, 0.2, 0.3, 0.4%, whatever it is. You can put that in. You don't even have to worry about calculating all the numbers. So just put in a percentage risk. I just think for me personally, it's the most easiest rather than calculating out exact dollar amounts. So it does all that for you. If you guys are looking for the platform to do all that work for you, Trade Locker is an awesome one. awesome, awesome, awesome. I don't get paid from them, but I'll promote them for free because it's just an awesome platform. But all that's available through Ola Prime. So anyway, okay, that's good. Let's go have a look. So we've looked at pound yen, pound dollar, CAD yen, Kiwi dollar. Let's go look at a couple of these guys. What did I just say? CAD yen, Kiwi dollar. That's right. CAD yen, CAD yen, CAD yen. Okay, so CAD yen, this is one that I like a lot. Now, so long as it does not yet touch the overhead supply, as long as we retrace without touching that box up there, then I'm okay to look for a simple demand zone down here to buy from. I mean, let's go take a look. So that's daily. This is 4 hour on the left. There is a little more of an aggressive zone here. That'd be about the middle of the curve. Swing low, swing high. Okay, that is in the middle. But it's also the 115 psychological level, which is a nice little added bonus. It's not a reason to buy this. It's not a reason for me to buy because I have to look for the unfilled orders in the zones. But it's also nice to see it line up perfectly with that zone. So this acts as both a 4 hour demand as well as a 2 hour demand. The VSA, the volume is looking pretty good on those legs out. We did have a little hiccup with that supply, but we did eventually regroup and break through and close above it. So I like that for those reasons, especially that psych level right there, that psych number. But if we go further down, then I definitely feel like the zone down here is probably going to be a cheaper one, a better value, and obviously at the bottom end of the curve, the discount area. So I really like this zone down here. I dislike the volume. Guys, nothing is ever going to be 100% perfect. You guys constantly hear me say, well, I like this, but I don't like that. I like that, but I dislike this, right? It's hard. It is hard when it comes to a trading strategy to find every single rule, to check every single rule off the box when it comes to my trade plan and certain things I look for on my main order of operations with the zones and the master pattern, the fair market value, all that stuff. And then getting into the odds enhancers as far as momentum, RSI, VSA, confirmation entry, using VWAP as a bounce at times, fib retracements. So it's hard. I'm telling you, it's hard to find trades where everything lines up perfect. So at the end of the day, though, we just got to pick a car off the lot and go test drive it, right? That is one thing. That's one of my personal challenges is trying to be too much of a perfectionist. And then I miss out on moves like what happened to me last week with the FTSE. Okay. And I'll end it on this because I know I'm out of time, but look at this. I had 2 demand zones I drew up that bounced perfectly. One here on the 4 hour, one here in the middle on a 1 hour. Look at it, just bounced perfectly. Okay. That is my pickiness. But that's the pickiness that has just greatly improved my win rate. Because whenever everything lines up, I felt pretty damn confident going in. And of course, I'm still pretty simple on my risk. Okay. Started off these challenge accounts at 0.2%. I'm up to 0.3 now. That may not sound sexy at all, but guys, I'm in it for the long term, for the long run. So I'm not trying to hit home runs anymore. I'm just going for those singles, those base hits. Because again, the ripple effect takes over, the compound effect. And then that's what eventually starts growing an account. So I'm doing it the boring way, but I'm also doing it the way to where I can sleep at night with peace. So ladies and gents, that's all the time I have. We will be back tomorrow, same time, early in the morning. And yeah, y'all have a wonderful day. Stay safe out there, okay? Talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.